بسم الله الرحمن الرحيم الحمد لله والصلاة والسلام على رسول الله محمد وعلى آله وصحابته الغورة الميامين والتابعين لهم بإحسان إلى يوم الدين أما بعد السلام عليكم ورحمة الله وبركاته. Let me also join previous speakers since yesterday to date, as well as panelists, by thanking the organizers, Takaful, for inviting me to participate in this maiden edition of the African Takaful and Non-Interest Finance Conference. Yesterday, several speakers have assisted me in doing justice to some of the sections in my slide. So I'm going to skip so many of them which had been covered yesterday so that we can maximize our time. Yes, we talk about Islamic finance. Basically, Islamic finance has two legs. The first part of it is the ICF, which we refer to as the Islamic Commercial Finance, that comprises of Islamic Bank, Islamic Capital Market, the Takaful. Under the Islamic Capital Market, we have the Sukuk, the Investment Fund, the Equity Market, among others. The second leg of the Islamic finance, which is what this section is going to dwell more on, is to look at the Islamic social finance, under which we have other Islamic financial institutions. Just like we have the Zakat organizations or institutions, we have the Waqf institutions, we have the Sadaqah institutions, and of course, we have the Islamic microfinance, amongst others. So what this section is going to look at, basically, is to look at how the instrumentalities of the Islamic social finance can also be deployed to complement, the other leg of the Islamic finance, which we have been talking about since yesterday. So basically, Islamic social finance is an instrument, it's a tool that can be deployed, to provide social services, to also reduce, the gap between the have and the have-nots, to provide relief for those who are suffering from deprivations, among others. And to do this better, there are these well-known and common tools or instruments that we need to understand how to use it, when to use it, and then for who we are supposed to use them for, so that it can have the desired goal. That is talking about zakat, sadaqah, and waqf. Looking at zakat, we all know as Muslims, for those of us who are Muslims, it is one of the pillars of Islam. We have 5 pillars. Zakat is one of them. In nothing less than about 28 to 30 places in the Quran, Allah mentions zakat along with salat. Each time Allah talks about salat, the next is zakat. Those who establish prayer, and then those who also pay their zakat. Zakat has two meanings. We can look at it from the literary point of view, and then we can look at it from the technical point of view. From the literary point of view, zakat means tahara, purification. Zakat also means tazkiyah, sanctification. Zakat also means, growth and increase. And namaha was ziyada. There are Quranic verses that also buttresses all these. I don't want to go into details of the Quranic text and what have you. And zakat also means al-hidayah, guidance. But technically, zakat, this is where so many Muslims do not get it right. people believe that zakat is just that arm. You can dip your hand in your pocket, bring it out, maybe 2,500 naira, maybe 1,500 naira, you give it out. That is not zakat. Technically, or going by Sharia, zakat refers to the determined estates. It's not just money, estates. Taken from specific types of wealth. Just underline, you know, some words will be repeated here. They are synonymous or they are associated with zakat. Specific types of wealth. When they reach a specific threshold, which is called nisab, at a specific time, which is called the hawl, which must be spent on specific categories, that is the asnaf zakat, zakat beneficiaries, in specific ways. This is what zakat means technically. We'll be looking at this specific as we unfold, you know, our conversations in the next slides. Conditions governing zakat payments. The number one is that zakat is not compulsory on a non-Muslim. Zakat is compulsory only on a Muslim. And not all Muslims. Only those who are liable and qualified to pay zakat among the Muslims. It is also one of the conditions that the person who must pay zakat must be a freeborn, not somebody who is under bondage, who does not have the freedom to decide what he or she wants or what he or she can do. Number three, must be matured. Number four, must have sanity of mind and body. Number five, the estate from which zakat is to be taken must be halal. That is, it must be pure. It must not be tainted with what is not permissible. Number six, the person who wants to pay zakat must have the ownership and control of the wealth. At times, the estate may belong to you, you may have the ownership, but you may not have control over it. So at that material point, you cannot pay zakat because you don't have control over the estate. Number seven, the wealth from which zakat is to be paid must be equal and above the nisab. The nisab is the minimum threshold. It's like the yardstick with which I will assess myself to know whether I'm qualified to pay zakat or otherwise. Today in Nigeria in particular, we do not have a unified nisab of zakat. Why? Because we don't have, a central government or a central authority that can give directives to zakat institutions, to zakat body, and then they comply. Different states up north have different zakat commissions or boards that have control within their own geographical area. And then we have NGOs who are also into zakat. So this gives the various zakat institutions and body the latitude to be able to decide what their nisab is going to be. Some, they use 18 karat gold to arrive at their nisab. Some, they use 21 karat gold to decide their nisab. Some, they use 24. So that's why we have, discrepancies in terms of the nisab of zakat that people are using today. Then we also have part of the conditions is fulfillment of a lunar year, which is the hawl. It must be 12 lunar months, but not all zakatable items will fulfill this, especially when we talk about agricultural produce. Some produce, you can harvest them 2 times, 3 times in a year. If you look at Quran chapter 6, verse 141, it says, "Ohatu akaw yoma asodi." So such produce, zakat can be paid on them when they are harvested maybe 2 or 3 times in a year. There's some other items must go through 12 lunar months, as the case may be. And then, of course, the zakatable item must be investable, wealth or estate that we want to pay zakat on. Quickly, these are the zakatable items. We have about 15 of them. 15. Number one, if you have gold that is up to and above 85 grams, it is liable to, zakat is liable to be paid. If you have a silver that is about 595 grams and above, one is liable to pay zakat on them. Then we have cash and trading goods. For us in Nigeria today, the highest nisab of zakat is the one that says zakat nisab is 4,200,000. The minimum one says it is 1,677,511 naira 55 kobo. So, like I said, depending on what carat of gold one uses, it will determine what will be the monetary value of the of the nisab. Then we have rikas. Rikas are product of mines. The nisab for rikas is 20% of the value. Talk of gold, we talk of crude oil and their likes. Then we also have agricultural produce, like I've said, rice, maize, millet, and their likes. Their nisab also differs from the nisab of rikas, from the nisab of cash and trading goods. I may not be able to go into details because of time factor. Then we have fruit. The nisab of fruit also differs with the nisab for agricultural produce. Then we also have poultry farming. The nisab for poultry farming is the same thing with the nisab for cash and trading goods, which is the amount I've given, and then the zakat rate to be paid is 2.5%. But the nisab for honey, granite oil, and palm oil is 160 liters. 160 liters. And then the nisab for milk is the same thing with the nisab for honey, granite oil, 160 liters. The nisab for cattle and milk is the same with the nisab for cash and trading goods, which is the monetary value I've given, and the zakat rate to be paid is 2.5%. So for each of these zakatable items, their nisab differs. So then we also have, for those people who have companies or who are doing transport businesses, their nisab is the same with that of cash. Then for GRP, SCC, we are talking about gifts. When somebody gives you a gift that is up to and above the nisab of zakat, scholastic view over it is that it is also subject to zakat payment on the spot, if that particular gift is equal and above the nisab of zakat. Then for those who are also doing rental businesses or professional services, professionals among us like accountants, like lawyers, like engineers and their likes, can also pay zakat. Let me also mention quickly that some of the beneficiaries of zakat are also mentioned in the Quran, chapter 9, verse 60. There are 7. There are 8, as mentioned here. The poor, the needy, the zakat workers, the reverts, those who are in debt, those in bondage, in the cause of Allah, and then the wayfarers. As we are seated here, you may be wondering, wayfarers. A rich man can become a wayfarer when he or she finds himself in a situation he never anticipates. Especially this time when kidnappers usually, kidnap people, or, armed robbers, we lay somebody on the road, they take your phone set, they take your ATM, you become stranded. At that material time, you are a wayfarer. Such a person also can be entitled to collect zakat. Sadaqah basically is talking about, voluntary charity. Voluntary charity. You give out without expecting any reward. Even you are not waiting for somebody to say thank you. That is sadaqah, because your goal is the Almighty. You are doing it for the sake of Almighty, for the sake of humanity. Then the third one is what we call the waqfu. Waqfu also has 2 meanings. The literary meaning means to keep something, or to confine something, or to hold down something. But technically, waqfu means locking up of a title of an own asset from disposition and allotment of its benefit for a specific purpose. That is, for example, I may say I'm putting down maybe 10 million naira as a seed money for waqfu. That 10 million naira, we won't distribute it out to people, but we put it into a productive use. The return that 10 million naira is bringing out is what we are going to use for charitable purpose, so that the original principle, which we call Aslul Mal, does not depreciate. That is what we refer to as Waqf. It also has conditions. Ownership belongs to Allah. The moment you institutionalize a Waqf, it is no longer your own. You have dedicated it, to Almighty Allah. You can't come back tomorrow and say, please, I want to take back, my Waqf. Number two, permanency of Waqf. It has a permanent feature. But today also, there is an argument and debate among scholars that Waqf can also take the form of a temporary Waqf. That is also another discussion for another day. The third one is that, part of the condition, there must be what we call Mawqufu alayhi. Mawqufu alayhi means the beneficiaries. When you institutionalize a Waqf, an endowment, you must specify who are to benefit from it. Depending on the type of Waqf you want to institutionalize. We have what we call Waqful Amma, general. Then we have what we call Waqful Khassa, specific. If it is general, it means it is for everybody. But if it is Khassa, specific, even if somebody that is in need, for example, you do Waqful Khassa for education, and then you have somebody who is in need for economic empowerment, you cannot take from that Waqful Khassa for education to give somebody for empowerment, because it has been specified in the Waqf deed, which we call, Hujjatul Waqf. And then it has pillars. The pillars of Waqf is that we must see the Waqif, the endower. We must see, the Mawquf, the object to be endowed. We must also see the Mawqufu alayhi, the beneficiary must be specified. And then we must also see what we call Sigatul Waqfu, that is the Waqf deed, which will contain information, detailed information about the Waqf. The last but not the least is to have the Mutawalli, the administrator or the manager of the Waqf. And then it has categories. 3 categories basically. Waqful Khair, which is the general philanthropy. Then we have Waqful Ahli, which is the family Waqf. Then we also have Waqful Mushtaraka, which is an hybrid, combination of both the general philanthropy and then the family philanthropy. And of course, this is one area where I want to draw our attention before I drop the mic, because my time is up already. My time is up, I understand. Please, apology. This is one area where we need to focus on. Waqf is one of the tools that is grossly underutilized in this space, and I'm sure also globally. Waqf Zakat is a new concept which has not been put into use by so many Islamic organizations and institutions. Then we also we know Sadaqat Mujariyah, which is a perpetual charity, which so many people are doing. Then we have Waqf Sukuk. Waqf Sukuk in this part of the world, especially in Africa here, we have not been able to take advantage. But when we look at countries like Saudi Arabia, you look at Singapore, we look at New Zealand, they have gone far ahead where they have used instruments like Waqf Sukuk. If you recall, for example, the KAW in Saudi Arabia facing the Haram, the Holy Sanctuary, that tall tower building with that big giant clock, it was built through Waqf Sukuk. They used Waqf Sukuk to build it. And today, that particular Waqf started it in 2002 and is most likely going to end. The tenure of that Waqf would likely end in 2037. By that time, the Waqf will revert back to the owner of the land. And who is the owner of the land? That is the Masjid in Mecca and the Masjid in Medina. They are the owner of the land where that giant edifice was established. They use Waqf Sukuk to do that. Another model which we have not started using in this part of the world is Waqf Takaful. They are already using Waqf Takaful in South Africa, in Pakistan. It's a model which we hope our regulators, if the operators can come together to look at its viability and workability in Nigeria, can also sell to the regulators for them to be able to look at it. Then also we have the Waqf Istismar, investment Waqf. And then the last but not the least is what we have Wakfu Nukud, which is the contemporary concept of Wakfu, which is cash Wakfu. Any person can do cash Wakfu, whether it's a rich man, whether it's a poor man, they can do it. Because of time, I will have to just stop here so that the compare will not come again with another note. Thank you so much.
Thank you very much, Imam Abdullah Shoaib. The essence of this session is actually to intimate us about what Islam preaches about zakat, sadaqah, and waqf, and how this impacts the society. And that's essentially why we're here. Takaful is an ethical company that is involved in ethical business. And they try as much as they can to also spread knowledge about ethical practices that will impact the Ummah. And I guess this is the essence why we have this topic as part of the paper for these sessions. We would like to discuss how these various principles that has been enunciated by Imam impacts the society, and what is the role of organizations, not only Takaful, organizations within any society. What role should they play in ensuring that zakat, sadaqah, and waqf benefit the environment and the society? I would like to start with Mr. Shadi. Mr. Shadi works for the UN agency, and they are involved in zakat and sadaqah collection and utilization across the world. I want him to share his experience with us about what they do and how this is impacting humanity. Bismillah.
Thank you. Thank you so much. I think for the sake of time, I'm just going to go straight to the topic. I would like to start by, explaining why. Why is an agency like us tapping into, this, let's say, space? First of all, it's really important to note that nowadays there are more than 100 million displaced people worldwide. If we just stop, and think about this number, it's a huge number. And more than 50% of them are coming from states that are part of the OIC. So, and many of these people are actually eligible to basically receive zakat. They do fall under at least 4 of the 8, categories that were actually mentioned, earlier. All of these reasons together has driven us to really seek, let's say, Islamic opinions about, is UNHCR allowed to actually receive and to basically distribute zakat? And if the answer is yes, what are the measures that we are supposed to have in place to make sure that we are actually complying with all the rules? And I have to say that the response that we have got is really let's say it was really good. We have approximately 15 let's say fatwas from different parts of the world, and all of them say yes, it's okay, but we have to follow 2 main conditions. And these conditions is that the beneficiaries need to fall under the zakat categories, and the second condition is that UNHCR is not allowed to deduct any fees or wages from zakat. And this is an extreme responsibility for us. We take it extremely seriously. At any step, we are making sure that we are complying with these rules in the, in the process that we receive, and we also distribute zakat fund. Briefly, zakat and also sadaqah have enabled us so far to basically assist more than 6 million people who are basically displaced from Jordan to Yemen to Nigeria to you name it, Syria, of course, as well. And we are extremely proud of this, and we look forward to actually continue making this, the same impact on the lives of people.
Thank you very much. I believe that this effort that your organization is making is alleviating sufferings around the world, and you'll be able to continue to do that. I'd like to ask Professor Tajuddin, now we have listened to what is zakat, what is sadaqah, and what is waqf. What do you think institutional guidance should we have for people that collect zakat, people that distribute zakat, to ensure that the intention or the stipulations as contained in the Quran as per distributions are adhered to?
Thank you very much. Alhamdulillah wa salatu wa salam ala ashrafil mursaleen Sayyidina Muhammadin wa ala alihi wa sahabati ajma'in. When we talk about zakat or sadaqah or waqf, we are dealing with money, and it's a very emotive issue. And Allah subhanahu wa ta'ala recognizes that in the Quran when he says, وَهُدِرَتْ الْأَنفُسِ شُحْ. Man by nature is very stingy, very greedy. He doesn't want to he doesn't want to give out. But Allah says, وَمَنْ يُقَّشُ أَنَفْسِهِ فَأُولَٰئِكَ هُمُ الْمُفْلِحُونَ. If you can control your greed, you will succeed. Now, for those who collect zakat, they must have in place Sharia governance, what is called corporate governance, so that there must be transparency, there must be accountability. They must have what we call fit and proper personnel. Fit and proper personnel. Those who are going to collect zakat must have the expertise. It is not for every Tom, Dick, and Harry. You understand? So they must have that. They must have a board in place. They must have a board in place. Board of those who meet Sharia requirements. This board is not where you sit forever. Max 6 years, leave. And then you must have management in place. You must have general meetings. You must be able to give feedback to the payers. Be transparent. So that people who are paying zakat, they can know that what the money is being used for. And also, zakat payers can be given certificate of payment, which can be beneficial for tax reduction purposes with the Federal Inland Revenue or whatever zakat institution you may have in your country. So there must be transparency. The zakat we collect, how we distributed it. We must give the breakdown. You know there are 8 recipients of zakat. You must show what percentage of that money has gone for fukara, masakin, al-amilina alayha, your salary. You know, those who are collecting zakat, they must collect their salary from that. How much portion of that zakat has gone for salary? It must not be more than 1/8, so that you don't collect zakat and more than half of it is for salary. No.
So we must institute and embed in zakat collection and distribution transparency, probity, and openness. And then we'll be ready to give account. And I like what I saw here today. And one of the zakat collection, NASFAT, they have, you can see their report. I'm also in a board of Zakat and Sadaqah Foundation. Annually, we must release our report. The money we are collecting from people. Into what use are we putting there? What is the impact we are creating in society? So that those who are paying the zakat can feel fulfilled that yes, they are doing it well. And until we do it well, you won't have more people coming on board to pay zakat. Thank you very much.
Thank you very much, Prof. As it is, this is a corporate setting, and we're looking at zakat, sadaqah, and waqf. So how does it affect corporate organizations? What impact should organizations play in ensuring that zakat, sadaqah, and waqf actually gets to the needy? Is there a role for corporate organizations? I would like Imam Tribe to share an experience with us about how they have been able to set up WAF and how they have used it in their organization.
Thank you once again. My organization, Jais Charity and Development Foundation, was established by Jais Bank, PLC, as its charity organization which carries out some of its corporate social responsibilities and charitable activities. When the bank availed the foundation of its seed capital, which was about 2 billion naira, as far back as 2012. As a charity organization, if the promoters did not have the foresight, collect 2 billion naira and they say you use it for charity, and we will have disbursed that 2 billion at that time, today I will not be sitting here, as the CEO of the foundation. So the first thing the promoters did was, to put that money into workful, space, because the foundation itself is a workful base. So part of the 2 billion was used to establish Jais Takaful Insurance Limited. So Jais Takaful Insurance Limited is a workful-based corporate, is a corporate workful of Jais Charity and Development Foundation. So this may be sounding as a news to so many of us who are here who may not know, because it is the foundation that owns the Jais Takaful Insurance Limited. That is number one. Through that window, we have been able to create, job opportunities, for so many, brothers and sisters, Muslims and non-Muslims alike. Number two, also part of that, seed money provided the foundation was also used to also establish another corporate workflow, which we call El Jais Investment and Services Limited, which provides, facility, management services, outsourcing, training, and commodity, businesses. The reason for this is to ensure the sustainability and continuity of the charitable activities of the foundation, so that the foundation will not collect the seed money, distribute it, and then again start going back looking for money here and there. Part of the corporate workforce established by the foundation also was Jais International Halal Certification Limited, which is, an organization that goes into halal certification. For those who knows about halal, who wants to go into the halal space. And we have also done this with part of the seed capital. Besides all this, we have done so many interventions, especially from 2013, 14, 15 in the Northeast, those areas that were ravaged by the Boko Haram menace. A lot of money has been sunk into those areas to provide succor, for those who are displaced. And I must also mention that part of the activities of the foundation is also zakat collection, sadaqah collection, zakat disbursement. For every year, the foundation disburses zakat, to Muslims who are deprived of one thing or the other, especially in the area of economic empowerment, medical, as well as education. This year alone, we have done that, and we still have outstanding. The grand finale of the zakat disbursement will be done in Abuja in this particular month to kind of round up our zakat, collection. So we do this by looking at the segment of the Muslims community that are seriously in need of intervention. And of course, I must also mention, as part of what we also do in terms of workforce, is to sink boreholes, to create walkways for those who are unable to have access from one community to the other. These are many more, and some of those things that the foundation has been able to do, with the seed money that comes, from its mother organization, as well as the sadaqah that we collect, from well-to-do Nigerian Muslims and non-Muslims alike. And of course, our intervention is not limited to just Muslims alone, because we know which of the tools to use for those who are Muslims, those who are non-Muslims. Most of our non-Muslims beneficiaries, they take advantage of our sadaqah and our waqf, while we focus more on the Muslims with zakat, because the zakat was paid by Muslims and we use it to, to support, Muslims. So these are some of the things that we have been able to do with zakat money to create impact.
Thank you very much. I wanted us to share that experience so that corporate organizations that are here can also learn that there are various ways that we can contribute to the society. I will crave the indulgence of the House for a little more time so that we can benefit from this session and round up very quickly. I have with us Dr. Ashraf, who has been earlier introduced at the last session. He's also part of this panel, and I will want him to speak to us about the place of zakat, sadaqah, and waqf in corporate organizations. Thank you.
Thank you very much. I just take 2 minutes. There are 3 points that I would like to stress on Waqaf. Waqaf is, as mentioned by our presenter, is a very powerful tool where if you talk about sustainability, this is very sustainable because the principle will be protected and only the proceed will be used to go to the beneficiaries. So my point number 1, we as individuals need to plan to give as much as we can, because when we pass away, only 3 things that will continue to give us dividend while we are in our grave. One of them will be the sadaqah jariyah, which is the waqaf. My point number 2, there are trust deficits, not worldwide, on charitable organization, and therefore Takaful, like what mentioned by presenter, by Imam, and also maybe Nur Takaful, we have the opportunity to give solution to the public because we can have a plan where people can contribute maybe monthly, maybe if they, because it is a Takaful program, so that they can achieve what they want to achieve at maturity, or if they pass away before maturity, other people can help to achieve what they want to achieve. So whatever amount that they want to contribute will be achieved through the through like Takaful program. And since it is an institution, it will be audited. There will be transparency and so on and so forth. So this trust deficit can be overcome. My last point is that on again on Waqaf, let us make it big. We are not talking about a Waqaf of only 1 or 2 million. Let make it 500 million USD, 1 billion USD, 3 billion USD. How? There are structures that we can combine business and sukuk, for example, whereby it is before maturity it is a business entity, but after maturity it will become a Waqaf entity. The structure, I think we can further discuss later, because in sukuk, anywhere in the world, if you want to raise 500 million, just half a day you can get 500 million USD. Yeah? But if you want to raise fund traditionally to get 500 million, I'm not sure how many years that we can achieve that. But inshallah, if we sit down together, we can achieve that, and the impact will be very, very big, inshallah, to all. Thank you very much.
Thank you very much for the intervention. And like we said at the beginning, the essence of this session is to see how we can benefit the society and benefit the Ummah generally. And I have learned a lot since the issue was initially introduced and I was asked to moderate this session. I've learned so much about WAFT, and I'm sure I'm going to be working towards institutionalizing one. And I hope that other organizations that are here and individuals will like to read more, so that this is the only thing we can use to benefit the society. And there are trust deficits everywhere. It's not only in Nigeria. So unless we set standards and we keep to those standards and we introduce transparency around them, then we will not be able to get people to participate. Thank you very much.
Another round of applause, please, for them. Right. Now, our next panel should have actually come as a second panel of the day. I'm saying this as a disclaimer for those of us who have the schedule of events. We had to shift things around to accommodate for a few things. Adaptability is the name of the game, and we play it very well. Now, our next panel is going to be moderated by someone I had the pleasure, well, we both had the pleasure of meeting yesterday. He took a very different turn from everyone else and decided that he was going to present his paper from the floor. Who remembers him? He was moving about quite a bit. Yes. And if you'd had your feet out in the walkway and everything, he'd probably have tripped. So you see, when we stick to the rules, it all works fine and great. Now, this person has worked in a number of countries, right? He's worked on a series of projects that cover countries including, but not limited to, Egypt, Ecuador, Ethiopia, Madagascar, Mozambique, Nepal, the Dominican Republic, Tunisia, Senegal. Now, if you ignore some of the other countries from other continents, this man may as well be an African because he spent too much time in African countries not to be one. I have the pleasure of introducing the moderator of the next panel. They're discussing Takaful as a socially inclusive and sustainable business model. Michael J. McCord is a renowned expert in microinsurance with extensive experience in developing and managing microinsurance products. He has held key positions such as controller of a US commercial bank. He was CEO of a microfinance institution in Uganda and regional director for microfinance programs here in Africa with Finca International. He's got over 23 years of experience specifically with an organization he founded, the Microinsurance Center, which is now known as the Microinsurance Center at Milliman. Mr. McCord does us the honor of moderating this session. Please, your hands together as he makes his way to the floor. He's been very specific that he's not coming to the stage, so he will speak from the floor.
Nabila, thank you so much. That was very kind. And to be called an honorary African is probably the best thing I've been called in a long, long time. So thank you all. We're really excited. I have several speakers to come. We're just going to come right up. And just going to come right up and be here. What we're going to talk about today, I am going to stay down. And once I introduce all my speakers, you'll see why. I don't even belong up there with them. They're just so far above me. So I'm going to stay here and talk with you. We're going to talk about the concept of sustainability, Takaful and sustainability. We're going to look at issues of the inclusive business model. How is the Takaful model an inclusive business model? And I think this is really important for us to think about, and I think it fits very, very well with the objectives of Takaful. So we talked about those yesterday. We're also going to talk about the ESGs, environmental, social, and governance objectives that have become so popular all across the globe. And we're also going to talk about the SDGs, the Sustainable Development Goals, and the role that Takaful has in those areas. We're going to look at a couple things. When you leave here, you're going to have a better idea of how to take some of these ESG concepts and apply them in the work that you do. You'll remember from yesterday that I like to be practical and that I like to have action. So you'll learn some ways that we can, some ideas to improve our ESG. We'll also find ways, ideas for looking at sustainable development in terms of its promotion of social and environmental aspects. Now, to do this, I told you before that I have this great panel. And so I want to introduce them just quickly. First of all, how many of you, this is a hand-raising thing, how many of you even know anyone that has 5 master's degrees? 5 master's degrees. How many of you know someone? One person. Okay, who? Do you know someone? An insurance person? Okay, wow, excellent. Excellent, I'm amazed. So that's the second. So we have a speaker today who has 5 master's degrees, a PhD, and has also done work selling cosmetics. Cosmetics. It's amazing. But what we have in Jubril, Dr. Jubril Saludin, what we have is somebody who has so much experience in so many things and is able to bring those pieces together and help us to have an efficient and an effective discussion today. Okay? Yeah. 5 master's degrees. Can you believe it? And he's studied, look, you can see the list. It's Sharia, accounting, finance and control, economics, management information, Islamic finance, development finance. Oh my gosh. He must spend every evening at the university or studying, right? And I have also a good friend of mine from Egypt, Dr. Tariq Sif, and he's the General Secretary of the Insurance Federation of Egypt. A good friend for several years, and it's great work that he's helped to do at the Insurance Federation to help guide and move the insurance industry as well as the Takaful components. And he has experience, he's an author of 2 books on Takaful and Islamic insurance. I have one of them in my museum in a very prominent place because it's excellent and an excellent look at Takaful itself. He's got underwriting, management, Takaful experience, and he is also a PhD, Dr. Tariq. I also have Mamadou Diouf, who is the MD and CEO of West African Takaful Limited in the Gambia, but he has 28 years of experience, a broad range of experience around, including here in Nigeria. He's been MD and CEO several times, Takaful companies. He's got a master's degree in management with a focus on Takaful. So Mamadou. Okay, and now we have Dr. Hassan Bashir, who is the head of Takaful Africa, and he's going to be our speaker this morning, and he's going to help us through these issues. But he also is extremely well-rounded. He's taught at universities, he's an entrepreneur, he's done work in insurance and Takaful and pharmaceuticals and healthcare and technology. He's an advisor globally for public and private institutions. And right now, I'd like to invite him to come and talk to us, advise us, if you will, about sustainability.
Thank you. May I correct the notion that I am the CEO of Takaful? I used to be. I am not the CEO right now. And when I grow up, I want to be Jibril. Thank you. So I have 15 minutes to run you through a presentation on how and why I think the Takaful model is a sustainable, inclusive model. So there's not my time, so I'm going to zip through slides. And if I don't explain something well, then we can pick it later. Okay, so let's start with the sustainability aspect so that we have a common definition. Defined as by Brundtland Report 1987 as development that meets today's needs without compromising tomorrow's society to meet its own needs. So that's the basic definition of sustainability. So we meet our needs today, but we don't compromise tomorrow's society to meet its own. So just have that at the back of your mind. And how is Takaful that? It refers to a few components that are central to sustainability. That economic development is central, social inclusion is central, and environmental protection is central. So those are the three key components. The fourth one that is not on this slide is the governance in the ESG. And so we will talk to that as well. Okay, so socially inclusive design, Takaful. I think many of you from the industry have come across this term. Takaful has been derived from the root word kafala, and that is central to the definition. So let's see how Takaful's definition really is inclusive, pushes economic development, and governance as well. I picked the two definitions here, both of them, unfortunately, or fortunately, from Malaysia. So forgive me if I left some out. So joint guarantee, this is Ali and Rodano. Joint guarantee, whereby a group of participants agree to mutually guarantee each other against defined. That's a good definition. A second definition from the Takaful Act of Malaysia, also an arrangement based on mutual assistance under which Takaful participants agree to contribute to common fund, providing mutual financial benefits payable to Takaful participants. It's mouthful long, but I want to break it down for you. Those two definitions have these elements. Very quickly, inherent in the definition of Takaful, the concepts of solidarity, co-guaranteeing, self-guaranteeing, mutuality, cooperation, community, participation, shareholder care, inclusivity. So the concept of sustainability, inclusion, economic empowerment are actually inherent in the definition of the Takaful model. That gives you an idea of where we're coming from. Let's compare that with the conventional insurance, which generally is an excellent model of risk mitigation, risk transfer model. We've heard yesterday Takaful is a risk-sharing model. So the conventional model, which is fairly old model, and from which Takaful has a lot to learn, is a straight line. Really, it collects premiums, it pays claims and operational expense. You can add the investment income from the premium, and you declare a profit to the shareholders, or you plow it back and invest. So it's a very straight line. And the reason for me to bring this up here is just to help you compare the conventional model, which is a straight line, with the Takaful model. So what is the relationship between the conventional insurer and the customer? Two relationships, or largely one relationship, which is critically important. And I think our speaker yesterday spoke to how important that is, to pay claims. A risk transfer model. The principal job of a risk transfer model is to pay claims when they happen. And it's not a small job. And perhaps which Takaful companies have to learn how to do well as conventional companies. The other relationship that can be seen from the conventional model is, returning to society through CSR, which is also equally important. How does that compare with Takaful? Let's look at the Takaful model. It has generally two sides. Yesterday when I was sitting there and today I realized the bottom of the slide is not normally seen by the people in the room. It's a bit low. So the Takaful model has two sides, and this is simplified. I'm really, really simplifying it. The operator model, which pays expenses and returns to shareholders some profit. Thank you for that. Okay? And the risk fund model, side of the Takaful model, which, the operator side, which pays expenses and makes a return to shareholders, and the risk fund side, which pays claims and improves the reserve or declares surplus to customers, participants, as they are called in the Takaful model. So those are the two sides of the Takaful model. These are the models of Takaful as an inclusive and sustainable models. I have just panned out a few, and you will see that Waqf is part of it. I will explain how. Wakala model is a model where the operator is a wakil for a fees. So what does the operator do? Work for the customers, earn fee by working for the customers. So the business itself actually belongs to the customers. And you can see the inclusiveness of that. Mudarraba model, which is a profit sharing, pure profit sharing model. The business is run, at the end of the year, expenses are deducted, claims are paid, what's left, the participants and the share and the operator share. That's a pure Mudarraba model. Sorry about that. Oops, let me come back. The hybrid model, which combines Wakala in underwriting and Mudarraba in investment income. So again, the operator earns fee from the underwriting and shares profit in the investment income. Again, an inclusive model in terms of risk sharing, profit sharing. And the Waqf model, which generally the Takaful market hasn't applied very well, and I was very happy to listen to the scholars talking about that, is a perpetual model that can be used to serve society, that does not give profit to anyone, but can pay claims and support society. And I'm looking at a few, I've outlined here a few, those notes are too small. Societies endowed can create Waqf as a Takaful. Impact investors can use that Waqf model. Community crowding can be used to create a Waqf Takaful. And the public sector can also invest in a Waqf. That's a Takaful. One of the key areas where we have capacity problems in the Takaful market is the re-Takaful. Waqf model is an excellent model for creating a publicly financed, community crowded in Takaful fund that gives us capacity. Yeah? So that's a model that's great, and the scholars talked about it. Takaful businesses, common areas. The general Takaful is one area, pays claims, and declare surplus to society. Family Takaful focuses on the family, is interested in really what's good for the family. What we call life insurance in the conventional arena is family Takaful in the Takaful space, and really focused on the family and the family well-being. Micro Takaful can be used to serve the underserved in society, and Takaful provides capacity to the primary market. So again, all the areas of businesses within the Takaful sector are inclusive in nature by design. The relationship now, I have talked to you earlier about the relationship between the conventional insurer and the customer. Here is the relationship between the Takaful operator and the participant. And you will see that it's much deeper than the relationship between the conventional insurer and their clients. So, number one, the participant is of the pool is protected by the pool. That's the insurance element. That's the coverage element. Number two, the participant is a co-owner of the benefits of the risk fund. How is that? The risk fund pays claims to others. Okay? Even if you don't have claim yourself, the risk fund pays claims. Okay? It can declare surplus. The participant is a potential surplus owner. You can get profit at the end of the year if you have not had claim, and if the company has made profit, and if the Sharia board and the prudential guidelines have said enough money has been made to declare, then you are potentially a beneficiary of the profit. And fourth, you are an investor into common good of society. For example, if Nur Takaful has a charity account that gives back to society, educates kids, takes care of orphanages, whatever thawab comes from that, you are an owner. So you are an investor in the public good through the Takaful fund. So those are part of the relationship. Let me just talk to you about the benefits of a multi-layer governance system in the Takaful environment, which also underlines the inclusivity and the ESG aspect. The Insurance Regulatory Authority is the first level of governance generally, and then we have Sharia advisory boards or councils, as we call it. And we have board of directors that are responsible for the fiduciary, okay? And generally we have the management executives and so on. So the second layer there is unique to the Takaful model, and that improves the ESG aspect. We might take it lightly, Sharia governance, but it's such an important aspect of the Takaful model. You know, it has, beyond the Sharia council, the internal Sharia auditor, the external Sharia auditor, all of them are part of the governance, part of the ESG. Generally, Takaful companies fall short. I can see the great lady coming here. Usually, that's a sign that I'm not doing well. So let me just take you through a little bit, a long history of ESG in the Sharia finance area, and show you that something that the world is talking about now and has been talking about since the 70s was actually part of Islamic finance for over 600 years, 700 years. Okay? Conventionally, the origin of ESG, really environmental, social, and governance, can be traced back to the concept of socially responsible investing, which came in 1960s and 70s. In Islamic finance terms, the first Takaful company was created in 79, the first bank 75. The Waqf model is as old as Islam itself, okay? And therefore, socially responsible investment is something that has happened within the Islamic community for over 500 years, 600 years. So that really tells you the foundation of socially responsible investment, which is the foundation of ESG. Okay? 2 minutes, okay. Is it starting now or has started? Let's just very quickly recognize the importance of the inherent fundamentals in the Takaful model. Many of those aspects are part of Takaful: ta'awun, tabarru, compassion, empathy, all of those, socially responsible investment, all of those aspects are important. Recognize that these inbuilt fundamentals of Islamic finance define the underlying ESG and so on, and recognize them, record them, and report them as well as we want. We don't do that very well. The Takaful industry does not really bring out the ESG aspect that is weaved into the design of the model. And what I'm saying in this slide is it's already there. Report it, bring it out, record it. Tell us in your accounting how you have done the ESG, because you're already doing it, only you may not recognize. Okay? Recognize the compliance. Compliance is minimum. Someone talked about it yesterday, and I want to highlight this very well, as much as I can. Sharia license is just a license. Put it on the wall and provide a service. Offer innovations. Customers pay for innovations and service. We assume that your Sharia compliant is equal to that NICOM has given you an insurance license. We don't assume that that's what you'll sell to us. So sell to us an offer that's worth paying for beyond the license, because Sharia compliance is a license. Build the capacity. This has been is a key challenge in the insurance in the Takaful market. This building could be $10 million worth, insured by a company, a Takaful company that has a capital base of $10 million. You can see where the problem is. We need to grow, and that's an African problem. Last year, or the year before, Africa did about $70 billion in premium, which is about half of what, or let me say, Munich Re, the largest insurance company in the world, did 49 billion. Africa did 68, 70 billion. You can see how small we are. So those are critical issues that we need really to solve capacity problems. Malaysia is doing well with the implementation of intermediation for Takaful framework, which is an ESG program. You should look at it. Let me just move on to the value proposition of Takaful. I have talked about that a little bit, and the ulama can help us a little bit about the environmental stewardship. And my last slide to leave with you is for you to tell us what I've explained very poorly in a hurry, how many boxes the Takaful model ticks in the ESG. Thank you very much.
Hassan, thank you so much. This was an excellent overview with some depth and pieces that help us to think about and consider the sustainability aspects of Takaful. So this was really interesting. I hope it was for all of you. Does anybody have a burning question? Any burning question? Quick. This is your chance. Okay, then I have a question for you. One of the things that Hassan said is one of my favorite things to hear. What is the one role, the one key role of insurers and Takaful providers? What is it? Empathy? No. What? Empathy is important, yes. What's the one thing? The most important thing that we do. It's that we pay claims. Yesterday we talked about a lot of the issues that we have. But paying claims is what helps us bring trust. It helps us show people that we actually are helping them to be sustainable. Hassan, you talked about 4 models. Which of those brings better sustainability? You talked about Wakala, Mudabara, hybrid, and the Waqf method. Is there one of those that if we follow those, we're doing better with sustainability?
All of them.
All of them. Same. Okay.
Of course, Waqf is perpetually societal. No one takes profit. It's the scholars talked about it. So that is unique. The rest of the models have business element, profit motivated, and so with the exception of Waqf, but the all the 4 models are sustainable.
Mm-hmm. They're all sustainable in terms of models, and they're all sustainable in terms of the contribution to sustainability that they provide to the nation, the community.
But I must say, sustainability also refers to the survivability of the company. So the company must be able to make profit for shareholders, pay claims first, because that's why you're licensed, but also make return to the investors.
Okay. Jibril, how do you help to make sure that you maintain surplus for the investors?
Well,
how do you keep that sustainability? Because you can do sustainable activities for a couple of years, but if you can't survive yourself.
Yeah, and that's why I alluded so much to his last submission. I would rather be that lamp that takes a little bit of fuel and also give brightness, as compared to that lamp that goes off and burn off. So I will look at a model that also is given back to the investors as well as paying claims, rather than that model that pays claims and die off. So if you look around of Africa and you try to bring this home, at least in Africa, you will discover that most of the Takaful company, in the process of trying to assume some of this risk, also need to look at their own capital, because the capital becomes very, very important, or else we'll be allowing a lot of flights of our resources abroad. So it comes into a Takaful company, it picks a percentage of it and takes 99% of load to a foreign company, and that will be detrimental to us.
Yeah. So Mamadou, I see this all over the place in my travels. I see insurers, even local reinsurers, who take 10%, maybe 15%, and they cede 85%. And then even the local reinsurers, they cede also. And what you've got is this flow of money and flow of potential profits and risk, of course, but you've got that moving outside, and that limits the level of capitalization of the institution too. So how do you grow and create sustainability in an environment like that?
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم السلام عليكم ورحمة الله تعالى وبركاته جرجه سرين توبا. Allow me, because I may not have the opportunity again. So we are saying, once I want to mention that Nur Takaful is proving beyond all doubts to be in ethical business and leading in ethical business inspiration. To Chairman Abubakar Yusuf, Brother Aminu Rilwan, and your entire team, we pray for your continued success, and wish and pray that with Allah subhanahu wa ta'ala will grant you total success to maintain this noble, spiritual, inspiring conference annually or biannually. We encourage more Islamic finance institutions to emulate the likes of Nur. From yesterday, I had something burning in me that when we mentioned Islamic finance, unfortunately, my country, Gambia, was not mentioned. And we have 4 Takaful companies and 2 Islamic banks. And the first Takaful started since 2008, established by me. By the way, I have established 4 Takaful companies in 3 countries. And I've also written 2 books in Takaful. So, Takaful is a blood vein in my system. I am passionate about Islamic finance and in particular Takaful. Sustainability you're talking about. Somebody yesterday said, why is it that Takaful is not coming up with something like he mentioned medical? We are saying medical insurance. My current company, West Africa Takaful, is covering most of employers in Gambia. We have over 7,000 lives that we are covering on medical. With our medical membership card, you go to most or 3/4 of medical institutions in Gambia. Services are rendered and bills are sent to us for settlement. We also evacuate patients that need attentions overseas. But we're coming back to your question. Look at this. About 70% of this risk is being supported by Africa and Waikari. I don't believe in allowing capital to be drifted out of our continent. We need to sustain, and sustainability means looking inwards. I say a big thank you to Nikon in Nigeria, where I also operated, that you must exhaust local capital before you seek reinsurance overseas. But elsewhere in the continent, that is not the rule. They allow companies to take frontage. You take a big business of 20 million, only to be interested in 500,000. The rest of the premium or contribution by way of Takaful goes beyond outside our continent. We are not helping to build our continent. That is one thing. So let's see how we can allow companies operating within the continent to share business rather than allowing capital to be flying out of the continent. On the models that you asked Brother Hassan also, I would say it was an area of research that I did on models, the 3 models. And I would rather choose the hybrid model. Because Brother Salahuddin said, take a little bit of fuel and light. I bring that to the model of the hybrid, which says that you take a percentage of contribution coming in now, and then share in the profit that you distribute out. So that factor that you will share in the profit will motivate you as an operator to make sure that it is profitable. When you are allowed to do the Wakala model, it can be criticized because you are taking your interest from the word go. You receive contribution now, 1,000 naira. You take 30%, 300 is into your account. The rest, you have no interest in it. So you may not manage it profitably to see that at the end there is profit for you to share. But if you were to say your interest is 40%, but you are allowed to take 20 now, which is on Wakala base, and at the end of the period when there is profit, you are allowed to share in the profit, which is based on Mudaraba, I think that to be a more fairer model. We can talk about it on and on. Dr. Salahuddin will stop me soon. So let me stop here. Assalamu alaikum.
Mamadou, thank you very much. Thank you for the wisdom there. I want to move on to talk a little bit about ESG. We all are relatively familiar with the S and the G component. How does the environmental factor into Takaful?
Yeah, actually, this is a bit difficult question because S and G are very clear from many discussions. Actually, we have many ideas and many historical and textual evidences in Islam supporting the protecting of environment. So if we see in Quran, like stated and explained clearly in the first session, that the possession of mankind is a Khalifa. إني جاعلهم في الأرض خليفة. What does it mean, Khalifa? Custodian for resources and the earth. So it is the ultimate responsibility of the mankind to protect environment, earth, and the resources. Also in Quran, there is many textual evidences that wasteful behavior is not allowed, and stated clearly that Allah or God doesn't love wasters. So in Allah la yuhibbul musrifin. So this is all supporting the concept of protecting environment, the concept of environmental sustainability. Also in Sunnah, what is Sunnah? Simply Sunnah is the Prophet Muhammad's sayings, actions, and tacit approvals. In Sunnah, we have a lot of hadith, Prophet Muhammad saying, supporting the concept of rationality and not harming the environment. Even Prophet Muhammad prevents burning palms and the crops even in the time of the war. It is strictly prohibited by Islam. So this is to support the environment and to protect the environment. Also, if we skim through the history of Islam, we will find in Khalifa era the concept of hima, al-hima, hima. Hima means that a certain part of the land protected to be used in a very rational way and don't allow any sort of exploitation or over-exploitation of using this land. So I think we have many support to, and also at the end of the day, any idea, any new idea supporting the objectives of Sharia, maqasid al-Sharia, and I think Dr. Ziad yesterday explained what is maqasid al-Sharia. Any new idea, policy, regulation supporting the objectives of Sharia will be more than welcomed by Muslims and Islamic thoughts. Thank you.
Thank you. As we think about, yeah, please. As we think about the environmental component, one of the things that we see is that we have a climate change problem, all of us, in all of our countries. Are there ways in which Takaful, Sharia-compliant finance, can help us in terms of managing these issues of climate change? If we could just get quick responses from each of you, and I'll hunt for people to ask questions out in the audience.
Thank you. I think more importantly, after listening to Dr. yesterday and his presentation, one begin to wonder why we have not thought in this direction.
Questions?
And I'm speaking for Nigeria at this time. We have a problem of farmer headers, especially in the north, and other part of the southern part of the country. And we have never thought of using Takaful as a solution. These are problems that are generated because of the environment, because of the climate. Okay, with deficit of rainfalls and desertification coming in, there are lesser grassland for pasturing. And as such, the herders will then drag their animals into these farms, and it's causing a lot of trouble. Now, rather than deploring a military solution, Takaful is actually a solution. So, and I mean, taking that from him yesterday, I went back home and thinking about it again to say, now, we have a better solution in Takaful in that we can look at whatever it is that is in these farms and whatever it is that is the gap between, and actually place a climate Takaful on it, which could help. I hope it will be elucidated further. Thank you.
Thank you, Jibril.
Just following on.
Quicker than Jibril, please.
Yes, quicker than Jibril. Just following on from Jibril's explanation. In 2010, we introduced the first index-based livestock insurance in the world for pastoralists. That has now scaled to the whole of the Horn of Africa, with projects like the Drive now taking place, which actually ensures mobile pastoral communities for fodder scarcity, not life of the animal, for scarcity, for drought. And that is something right now I'm part of a team studying the intersection of farmer, herder conflict and drought in Nigeria. I'm part of a team studying that. And that's headed to creation of a policy that Takaful companies can carry. But Michael, we need capacity to be able to carry that kind of risk. Climate risk is very big, much bigger than normal risk. So we need capacity.
It is. It's a new risk. It's a new understanding, and capacity is really important. I agree. Yes. Mamadou.
Yes,
quickly.
I quite agree, Dr. Hassan. It needs real capacity building. It's a very big risk. But then when we bring it down to contribute to environment, we could think of the micro Takaful supporting farmers to do more than they are doing when they're not supported. We also have Islamic finance coming up with sukuk, government using sukuk to develop infrastructure. Why won't we use the same funds to develop rural areas and make sure that the shortage in rainfall and all that, we have artificial means of making sure that this is sustained? Thank you.
Yep. Excellent.
I think I have nothing to add, just to help people to increase their resilience against climate change.
So what capacity would be needed then?
We need to build the capacity, underwriting a capacity, and I think we need sort of synergy with the Islamic finance, as you said. I think this is the way we have to build the capacity. I don't know what is the best vehicle to build the capacity, is through reinsurance or having like a pool between Takaful insurance companies in Africa. It might be a good solution, and you know that we have good experience in Egyptian market in establishing insurance pool to dedicate more capacity to the market, so it might be regional one to help Takaful companies.
Yeah, I still want to add, I'm saying capacity would mean also that sharing. Certain markets are very good in agriculture insurance when others in the continent are only starting. We also may have to pull up to send young people to go and study and understand the risk better. Yes. We are happy that we are getting young actuaries like your staff now, as young as them. Let's send them out to study more about this in capacity building.
Excellent. Yes. Some good ideas here. We have one question, and then I'm going to come back to you. One sentence each. Okay, you remember from yesterday that I'm interested in action. What action should people take in August? Action August. What should they take, these folks, in August to help move us towards sustainability through Takaful? We have one question.
Yes, thank you very much. First and foremost, I want to congratulate Nur Takaful for organizing this conference. And I'm very sure, coming from the regulatory side, that this is one of the, I think, the pioneer Takaful event we have in this country, even though we used to have Islamic finance conferences. So thank you very much. And before I go into the question, we are talking about sustainability. Yesterday, I really appreciate the pioneer MD of Nur Takaful, Mr. Wanzwani Ismail, talked about collaboration. And today, I'm equally happy Juf was talking about, coming up together. And let me link it to what Mr. Michael McCord is doing in Nigeria currently. Because, from the regulator, we know very well when you are talking about surplus distribution, you have to come and visit the actuary. And Mr. McCord is doing very nice in this aspect, because actuarial capacity is very, very important. You can't distribute surplus when you don't have actuarial advice. So this is very good. Then Mr. Juf, I'm sorry I'm excluding Salahuddin here because we have operators, and from the regulatory, I know you are not an operator. We have Dr. Hassan Bashir, Mr. Juf, and Dr. Tariq. What are we going to do when it comes about core Takaful? We have only 4 Takaful operators in Nigeria. Juf, you spoke about cooperation. Now, can Takaful operators in Nigeria, how are they going to, cope with doing a core Takaful when there are very few? Or can they do it with conventional Takaful? I know there are Sharia issues. So these are some of the things that we'll take away and go and do the homework later. Thank you very much.
Thank you very much. Thank you. Okay, quick answers, quick responses.
Thank you. Recalling from yesterday, we emphasized on cooperation and collaboration. Competition kills the market, especially when we cannot avoid unhealthy competition. But when we cooperate and collaborate, the regulators supporting them would know that as operators for companies, there is no risk they cannot assume if they come together. Let them be encouraged to cooperate and collaborate so as to sustain more contributions within Islamic finance, where unavoidably they cannot exhaust a risk. Then they can use the Ghad al-Hassan, not Ghad al-Hassan, the rule of necessity. Darura. They can probably base themselves on Darura and extend part of the risk to conventional. But that is when they've exhausted all Islamic finance avenues capacity.
Okay. Somebody else want to respond?
The insurance model has the solution. The regulator is asking, how should you share? Co-insure, inward facultative, outward facultative can be used. The regulator has never said do not share with the other insurer before you reinsure. pass risk to Gambia, pass risk to Kenya, pass risk to Uganda, and so on before you reinsure. So, and that helps you diversify your portfolio. The more you share, the more you receive from outside, the more diversified you are. Your small capacity can carry more.
Excellent, excellent. Anybody else? Okay, I hope you're satisfied with that. Good, I see clapping, excellent. Okay, now, one sentence. What should these folks do in August? Action to enhance sustainability around the opportunities that Takaful bring us. Please.
One sentence.
That's it. Next.
Capitalize.
Capitalize. Okay.
You have a customer to serve. Sharia is a license. Put it on the wall. Comply with it. But sell value.
Sell value, yes. Yes, Mamdou.
Takaful is the fairest model or the fairest way to doing insurance business. Go out, think Takaful, come to support the likes of Noor so capacity can be built.
Think Takaful, yes. And Tariq, the last
I have
word.
a short comment on that. Building a capacity, and then I will summarize in one sentence, okay?
Okay.
It will not take time. Actually, about building a reinsurance capacity, we have the Islamic jurisprudence rules that necessity dictates exception, but we used it for long, and we are comfortable using it, but nothing done on the ground to build and re-takaful capacity in the market. So I think we have to stop discussing theoretical things of the takaful and to work. My one sentence, it might be one word, pooling system between takaful companies to dedicate more capacity.
Excellent, excellent. Tariq, Mamadou, Hassan, thank you for your presentation. Jibril, thank you everyone for bringing your wisdom. I appreciate it, and I hope that everyone appreciates it. Thank you very much.
Who can remember the name of the game? Adaptability. And that's what the gentlemen on the stage did with their panel. Quite a bit of adaptability or adapting that they did here. A round of applause one more time as they take their photograph. Thank you for your panel. Right. Now, if you look at your schedule of events on your program, every time you look at it, I ask that when you see the clock, the part that says this is the time, you can close your eyes there. Look at what is supposed to come next. That one, I guarantee you, will always be certain, at least going forward anyway. It's time for tea break, right? So the way we have adapted, I'm hoping you would have adapted as well. Yesterday when we said 10 minutes, we did 20. Now, adapting in this case does not mean do 30. It means do 10, right? Can I get a promise out of you? Are we doing 10 minutes? Some people are skeptical. They don't want to promise and fail at their promise. Right, so we're going to do 10 minutes of a tea break and then we reconvene. Are we fine with that? Are we fine with it? Okay, fantastic. Thank you. You're a fantastic audience. Right, so we're back here in 10 minutes. There's snacks provided for you, same place as yesterday.
in line with the code.
everyone. I would like to encourage us all to return to our seats. I'm well aware that there are a few people who are still in line to get their snacks. I encourage you, as soon as you get your plate, you can eat at your table. I did say that adaptability is the name of the game, and many of you today chose to eat your snacks at your tables. So I want to say thank you. We don't need to struggle over that. Now, our 10 minutes is essentially counting down. If anybody wants to tell me that the 10 minutes became 20 or nearly 30, I would tell you that your watch is not correct. It ran a little faster than its shadow. Please, if you've got your meals already, I encourage you to come back to your tables and you can finish them there. There are a few people in line, and they will get their snacks and come right in. The sooner you come in, the sooner we can start. Well, either that or we start without you. Thank you as you make your way back to your seats. If you're still eating your snacks, you can have the rest of it at your table. I encourage us all, we can have our snacks at our table. Fantastic. Isn't it amazing how 10 minutes fly right by? It has been 10 minutes, hasn't it? All right, so I would like to repeat our ground rules and invite all of you who are still in the exhibition area to please return to your seats. The first and most important, to always keep the aisle clear. Please, if you'd like to hang around and have a conversation, it's advisable that you have your conversation elsewhere. Gentlemen, if I could please have your attention. Could I possibly get an usher who can help me clear the aisle, please? So let's try to keep the aisle empty. We keep side conversations to a minimum. Phones on silent or on vibrate. And now that your bellies are full, well, full enough. It was really just a small something to whet your appetite ahead of lunch. Right, 10 minutes. By my time, it's 11:45. We're right on schedule. And depending on when we start this next segment, it will still be 11:45. You know, if you say something, then it's certain, it happens, something of the sorts. Once again, welcome back. We are well on our way. The second day of the African Takaful and Non-Interest Finance Conference. The very first on the continent. The conversations so far have been engaging. We've had a series of guests on this stage who have essentially regaled our minds. I'm sure for many of you, the passion continues to burn, continues to be ignited in the areas of Islamic finance and Takaful. Now, in just a few minutes, we do have a video that we want to play for you. That's getting set. Right after that video, I will invite someone from Nur Takaful who will take the stage and speak to you about their 2021 surplus. Brief conversation. And right after that, we will be presenting checks. In the course of presenting those checks, dummy checks, by the way, just in case you see the check and you decide that you want to snatch it out of someone's hand. I can't guarantee you that it will do you much. While those checks are being presented, we're going to get a chance to, well, the hearts and minds, the faces behind Nur Takaful. Yesterday we got to see the staff. Today we will get to see a number of directors with the company. They will be presenting the checks. Fantastic. Now, right. So I understand that we are still trying to load it up into the system. It will be loaded in just a minute. Right, we are ready to go. Good to go, good to go. Something about NYC comes to mind now. Right, so we're going to see a video. The video is our precursor. And right after, I will have someone come up on stage. You will hear my voice. I won't be on stage, right? But we're going to do this as smoothly as possible. You get to see one of the things or one of the benefits of a viable and thriving company such as Nur Takaful Insurance Limited. So let's cue the video.
In line with the concept of Takaful Insurance, we have been consistent with the distribution of surplus to our participants since 2017. What is surplus? Surplus is a unique offering of the Takaful model. With it, the participant's risk fund is the financial turnout from the risk elements of its business, being the balance after deducting expenses and claims. the excess of the total contributions paid by policyholders during a financial period over the total indemnities paid in respect of the claims incurred during the period, net of re-Takaful and deduction of expenses and provisions for reserves in underwriting. IOFI Standard 13. Our surplus history. 2017. We distributed a surplus of 12,051,000. 2018. It increased to 15,044,000. 2019. We had 36,309,000. 2020 was our highest till date with 109,846,000. We remain committed to exceeding your expectations as our surplus distribution keeps getting better each year. Some beneficiaries of our 2019 surplus distribution event. Some beneficiaries of our 2020 surplus distribution event. 2021. We are set for another surplus distribution. Leading, consistent, unparalleled. New Takaful, your win-win insurance.
Another round of applause, please. What you saw on that graph is called growth. That's what you saw. We're about to present the 2021 surplus checks. And just before that, we've got the pleasure of inviting the Managing Director of Nur Takaful, Mr. Rilwan Sumonu, to the stage.
Woo! Alhamdulillah Rabbil Alameen. As the trailblazer, as far as Takaful is concerned in Nigeria, we are doing it again. I hold this to the board of directors of Nur Takaful, the management, and also the staff of Nur Takaful. I want to say a big thank you. I know and I'm aware that we have the best team ever. So again, I say thank you to everyone. As an organization, we always think and work for the best. Year in, year out, we have challenged our team. I say to you, and I'm saying it with all modesty, as a CEO, I know I have the best board of directors that any CEO can wish for. And I give you a reason for this. I'll tell you why. I have sets of directors who will always ask for the best from you. Hit a target today, they set a higher target. And they just don't set the targets. They give you all the necessary support. I've had conversations with several CEOs, and I know what their experiences have been like. None is compared to the level of support myself and the VC we get from the board of directors. So I want to say a big thank you to the directors. Whatever figures you see us display here today, we owe it to you guys. Thank you so much. And to my colleagues, I want to say to you guys, just like I always say, as far as Takaful is concerned in Nigeria, behind scene, nothing. I'm very sure, based on the video that was shown earlier, we would have been asking ourselves, why are we distributing 2021 surplus in the year 2023? And there are reasons for this. We always wait for the last policy issued in 2021, for example, to lapse before we start the surplus distribution process. So in the year 2021, the last policy issued was effected on the 31st of December 2021. To lapse exactly a year, which is on the 31st of December 2022. So it takes a process. First and foremost, we'll review our books, get our actuary to review it as well, and come up with their report. It is on the basis of their report that we seek approval from our board, ACE, and finally from the regulator. So this takes a little while for us to get this final approval. So that is why oftentimes you see that for surplus distribution of 2021, we are just having the event now. And coincidentally, we are having the event. What we are having today is like a 2-in-1 event. We have our Takaful conference, and we are also distributing surplus. I say it with all modesty again. No other company can do that except no Takaful. So without further ado, I'll call on Nabila to please, we are going to call on our recipients to receive the dummy checks and also to call on our directors and others to come on stage and present the checks. Thank you so much.
All right. Now, just very quickly, right, we're going to call on some of our recipients. It's just a handful, really. But the presentation of the checks will be done with the support of some of the directors at Nur Takaful. You come through this side, you exit on that side. In the middle, a very big smile, please. Thank you. So we're going to start off by calling the chairman of Nur Takaful Insurance Limited. Please put your hands together for Mukhtar Bakari. Mr. Bakare will be presenting the check to Sterling Bank PLC, and representing Sterling Bank is Mrs. Olubusola Awoshile and Mr. Mustafa Arolo. A round of applause. Big smiles in the middle. The smiles are for you guys, they're not for the cameras. Please encourage them. Thank you to Mr. Bakari. We appreciate your time on the stage. Our next recipient will receive their check from Mr. Wan Zamri Ismail. Please put your hands together. Mr. Wan Zamri Ismail is a director at Nur Takaful Insurance Limited, and he will be presenting the check to Lotus Bank, represented by Akeem Mustafa. Can we have Mr. Mustafa up on stage? Encouragement, please. Put your hands together. Thank you, gentlemen.
So bring your good times and your laughter too. We gon' celebrate your party with you.
Now calling on Madam Ismaila Zakari presents our next check. This check goes to Jaiz Bank, and representing Jaiz Bank are Mr. Al Hassan Abdul Karim and Mrs. Salamatu Shaidu. Please put your hands together as they make their way to the stage. To the stage, please.
A celebration to last throughout the years.
All the way from Jai's Bank, Mr. Abdul Karim Al Hassan.
Your party with you, come on now. Celebration. Let's all celebrate and have a good time. Celebration. We gon' celebrate and have a good time.
Ladies and gentlemen, we have a unique presentation up next. I would have to ask the director, Mr. Ismail Zakari, to return to the stage. Yes, very unique indeed. Now, to present this check, I'm calling on Professor Ashraf Hashim. He will be presenting the check to Director Ismaila Zakari, who happens to be receiving on behalf of Ahmed Zakari and co.
Let's all celebrate and have a good time. Yeah, yeah. Celebration. We gon' celebrate and have a good time. It's time to come together. It's up to you. What's your pleasure? Everyone around the world, come on. It's a celebration.
A round of applause, please.
It's a celebration. Celebrate good times. Come on. Let's celebrate. Come on.
Thank you very much to Professor Hashim. We appreciate it. I call on Mr. Stephen Moya. He comes on stage to present a check to our next recipients. Istabarakim. And representing Istabarakim is Mr. Afiz Adelekekam and Mrs. Aliyu Mejirade Ajarat. They make their way to the stage. A round of applause. Please encourage them. Our next Nur Takaful director coming up on stage to present our next check is Hajia Mariam Ibrahim. Hajia Mariam Ibrahim is presenting a check to NASCO Group, represented by Paul Goet. Mr. Paul Goet comes up on stage to receive a check on behalf of NASCO Group. there was a caveat in this introduction. Our final check, right, is being presented by the Vice Chairman of Nur Takaful Insurance Limited. Aminu Tukur makes his way to the stage. Now,
I feel good. I knew that I wouldn't. I feel good. I knew that
all right.
I wouldn't. So good, so good. I got you. Wow, I feel nice.
All right. DJ, can we turn it down a bit, please? Thank you. Now, Mr. Tukur has the pleasure of presenting this check to the King's College Old Boys Association. The reason why it's pretty important for him is that he himself is apparently an old boy, and he's presenting to another old boy. Not only is this another old boy, this other old boy happens to be a member, a heart, a parcel of Nur Takaful Insurance Limited. Now, they want to get away by telling you that the King's College Old Boys Association or King's College is the best school in the country. Can I get a no, please? All right, so all the old boys are apparently being asked to make their way to the stage to receive this check. If you're the best school in the country, you've got to represent. And this is how you know. Faces you already saw on stage, by the way. Right now is a representation of a few good men. And what happens when you have a few good men in the room? Well, you know, typically you hear that you put your money where your mouth is. These men put their sweat where their mouth is. This is why they are on stage. Although I do take offense on behalf of everyone else in the room who didn't go to King's College. They can't be the best school in the country. Does anybody support me, or am I on my own? I'm championing your rights. A big thank you. Fantastic. And there you have it. Now, look, the surplus event is very critical to Nur Takaful. Every year, it is essentially a small idea of what the company has been able to achieve in essentially each financial year. This is why you had a very vibrant clapping choir in the corner there, right? They were supporting and encouraging themselves. Thank you for being a very lovely audience so far. Now, without further ado, our fourth panel of the day. Our fourth panel of the day is discussing the Islamic finance value chain. Our moderator currently oversees the business development and operations of the Lotus Group. She also serves as non-executive director at Lotus Bank Limited. She has 23 years experience that traverses financial strategy, business development, Islamic finance, and business process management. My apologies. I promise we don't have a hidden agenda to take your ears along with us at the end of today's event. Now, Ms. Toyin Kekereko happens to have worked at Guarantee Trust Bank's corporate banking group. There, she conducted credit structuring, loan syndication, and relationship management for large local corporates and multinationals. She also worked in the bank's treasury, where she headed the ALM department, managing the balance sheet structure and liquidity to ensure adherence to all of CBN's treasury regulatory requirements. At Stanbic IBTC Bank, she was segment manager for Islamic banking, where she worked on developing strategies to promote business growth, customer acquisition, retention, and profitability. Ms. Kekereekun is a chartered accountant with a BSc degree in accounting from the prestigious University of Lagos. She's also seen the halls of the Cranfield School of Management in the UK, where she earned an MSc in Finance and Management. Today, she's an alumnus of the Cambridge Islamic Finance Leadership Program and Harvard Kennedy School Executive Education Program. Ladies and gentlemen, I'm pleased to introduce your next moderator, Ms. Toyin Kekereekun. Please put your hands together for her.
Assalamu alaikum wa rahmatullahi wa barakatuh. Good afternoon, everyone. I'm actually delighted to be here today to be moderating our session. Our session is actually about the Islamic finance value chain, and I commend Noor Takaful for putting this conference together. That's because there are two things here since yesterday that has taken my attention, which is technology, and now we're talking about the value chain. You know, if you think about the year 2000, what were we talking about? Technology, the Y2K bug, and whether or not you had an email account. And now we're talking about blockchain and value chain and, you know, everything. And then when we talk about Islamic finance value chain, in the year 2000, there was absolutely nothing. No banks, no insurance, no pension, no products, no sukuk, no bonds, nothing. We all operated on necessity down here. And all we knew was, don't buy Nigerian breweries and don't buy Guinness. That's all. So we're happy that we've come so far today. So I'll be introducing my colleagues today. The first person that I'll be bringing onto the stage is Mr. Al-Hassan Abdul Karim. He's an executive director of Jaiz Bank. Al-Hassan is a highly accomplished professional with extensive experience of over 23 years in the banking industry. He brings leadership expertise, Islamic banking and corporate commercial banking, international trade finance, product development, and structured finance. He's a member of the prestigious organizations including Chartered Institute of Bankers, Credit Administration, Nigerian Institute of Management, and Commodity Brokers Association of Nigeria. He also has a master's degree in Islamic banking and finance, a master's degree in business administration with a specialization in finance and investment, and a postgraduate diploma in management. Al-Hassan, welcome to the stage. Can we give it up for him, please? Thank you. Okay, next up we have Dr. Abidin Adewale. He's a lead specialist in research, publications, and statistics at IFSB. Dr. Abidin Adewale is an experienced professional in the field of Islamic banking and finance. As the lead specialist for research, publications, and statistics at the Islamic Financial Services Board, as IFSB, he is responsible for overseeing research activities, coordinating and publishing research papers, and managing flagship IFSB Islamic industry reports. With a background in academic, Dr. Adewale has a wealth of experience in teaching, researching, consulting in various areas of banking and finance. He has presented papers and published numerous articles in reputable journals, and his expertise spans across different regions. Dr. Adewale holds a PhD in business admin with a specialization in finance and has obtained degrees from prestigious universities in Nigeria and Malaysia. He is also affiliated with professional bodies in Islamic economics and finance, demonstrating his commitment to the field. Welcome. Can we give it up for him, please? Thank you. Okay, and we have my colleague and longtime friend, Akim Oyewale. He's the Chief Executive Officer of Marble Capital Limited. Akim Oyewale is an Arthur Anderson scholar and has over 20 years' experience in investment banking, credit marketing, trade finance, sustainable finance. He managed the Stanbic IBTC Nigerian Equity Fund, that's Nigeria's largest mutual fund, and was responsible for the launch of the Stanbic IBTC of the fund. He's currently a member of the Securities and Exchange Commission Financial Literacy Technical Committee. Hakim is a fellow of both Institute of Chartered Accountants of Nigeria and Chartered Institute of Stockbrokers. He's an associate of the Chartered Institute of Taxation of Nigeria, Chartered Institute of Bankers of Nigeria. He also holds various decorations and awards from various notable institutions. He holds a doctorate degree from the Da Vinci School of Business, South Africa, and an MBA from Manchester Business School in the UK. He has a BSc in accounting from University of Lagos. He's currently a member of the Securities and Exchange Commission's Financial Literacy Committee. And finally, I'll introduce our speaker for today, Checks on Policy and Strategy for Large Financial Institutions and Government Organizations in Islamic Finance, Sustainability, Sukuk, FinTech, and Social Finance Advancement. Okay, so Dr. Ziad, we welcome you to the stage and you can start your presentation. Thank you. Please, can we give it up for Dr. Ziad, please?
I'm putting on the clock to make sure we stick with the time. Assalamu alaikum wa rahmatullahi wa barakatuh. Bismillah ar-Rahman ar-Rahim. Alhamdulillah. Alhamdulillahi Rabbil Alameen. Wassalatu wassalamu ala Sayyidil Mursaleen. Sayyidina Muhammad wa ala alihi wa ashabihi ajma'een. Amma ba'd. Allahumma la ilma lana illa ma 'allamtana innaka antal alimul hakim. We begin this discussion. I'm just waiting for the slides to pop up. And as the slides pop up, I think that it was really an honor and a privilege to witness one of the distinct differences between Islamic finance and conventional, and that was the surplus distribution that we saw. So congratulations to Nur Takaful once again for just highlighting this unique aspect of Islamic finance. And I think they need another round of applause, please. Our discussion today around Islamic finance value chain has several different key elements, and because of time and the robust discussion that has already taken place over the last day and a half, it makes our task easier, and I'm simply going to highlight certain aspects in our slides. I do appreciate the honorable and respected panel because they've gone through the slides diligently and have made their comments, and therefore, you know, I'm sure we are going to benefit a lot from their insights, inshallah, and when we go to the panel discussions. So to begin with, yes, I have my own clicker. We're going to quickly take a snapshot of learning from adversity. Look at Islamic finance values, as you've just seen on display, and then some issues in reality. Challenges in implementation. There's not always the good stuff. There's also obstacles in achieving that good. Delivering the value proposition. And you know, they say that hard work ultimately will deliver the value proposition of Islamic finance in the future. Some of my students say, no, well, hard work may pay off in the future, but laziness pays off now. So I'm not sure if we should believe them. Value-based finance and sustainability, we're going to talk about that. And finally, we'll try to sum that up in a few minutes as well. So a lot has taken place during pandemic. For Nigeria, your experience of pandemic may have been much shorter than countries like Malaysia and China. But countries like the Gambia and Senegal have particularly experienced a disruption in supply chains. A disruption in a supply chain that they are so dependent upon that it has brought thousands to poverty. In fact, the World Bank and IMF estimate around 500 million people moving to below the poverty line. And although the pandemic may be something of the past, the economic disruption that it has caused is still being felt and will be felt for the next 2 to 3 years at least. And that's before we deal with issues around climate change and issues that we really can't manage effectively until and unless the politicians really help us to guide policy in reducing carbon emissions. So the inequality gap has been increasing. But what's interesting here is that the wealth of the 10 richest men in the world doubled during COVID. Did you get that? The wealth of the richest 10 people in the world doubled during COVID, whilst 99% of the world's wealth actually went down, in fact, a lot of that by half. Islamic finance values, you've heard all about it over the last 1.5 days. It's all about good business practice, ethical practice, looking at the entrepreneurial spirit and building through economic empowerment. But there are challenges in practice. And those challenges include the fact that you have boards of directors and shareholders that expect the management to achieve KPIs, and that's generally short term, it's profit driven. There is competition, and there's a lot of it. There's also innovation, but that innovation is only to stay ahead of the pack. It's not to create social impact. Good conduct is generally driven by regulation. If the regulator says you must do it, then you will. But on your own accord, if you're expected to do good, well then there's limited incentive. And naturally, a limited amount of stakeholders really benefit. Now, what would an Islamic finance value chain really look like in an ideal world? Now, there are some instances of this, and you can find a bit of this in Malaysia and Indonesia. But if you want to understand how an Islamic finance value chain can really function, then it requires an ecosystem that is market friendly. And that means you have market institutions that have a balanced approach from individual and societal benefits. So you're looking at profit-driven companies that have social impact within their DNA. Commercial financial institutions make money, but they design products that ultimately empower those that need it and move people above the poverty line and service the wealthy and the ultra-wealthy as well, but allow that to close the circle with those that really need the funds below. Development and social finance institutions exist in this ecosystem where they take care of the downtrodden, the vulnerable groups, the micro enterprises and nano enterprises, and finally you have the regulators that really just put everything together, hold everything firm, ensure stability, and ensure that there is good ethical market practice. But all of this can be easily delivered through an enabling fintech solution. And you've seen that already. In fact, there are several insurance companies that are only online. They're not even physical at all. So Lemon comes to mind out in the US, but we also have FWD Takaful, which is in Malaysia. That is an online Takaful company, completely online. And if you have questions about whether that really works in the long term, you'll be surprised that there is a touch point that's also required by certain individuals for certain types of products. So the point here is that fintech is not the be-all and end-all, it's just an enabling framework ultimately. We also rely on government regulation within this value chain to instill frameworks that take care of issues around prudential guidelines, capital adequacy, etc., but also have social impact frameworks, like what was discussed this morning, zakat and waqf. Indonesia has these frameworks as part of regulation. And because of that, you'll find hospitals are being funded through what Prof. Ashraf mentioned earlier, a sukuk, but using waqf as part of that structure. So sophisticated Islamic finance instruments that can really drive infrastructure going forward. Ultimately, this is one point that I want to raise very quickly, and PPPs and blended finance comes up as an important part of the Islamic finance value chain. And if you hear many pundits or gurus in finance out in Europe, they'd say, well, Nigeria, you really need PPPs to be more effective. And PPPs, that's the answer. in our experience and our research, we find something interesting. We find that countries with lower levels of governance, yes, Nigeria included, do not do well with PPPs. You need to add another P. PPP, private-public partnerships with philanthropy. And philanthropy here, solutions like Waqf and strong governance of Waqf that underlie the entire process of the PPP, that can actually move it into a successful arena. So, as you know, typical pillars of an Islamic finance value chain are your banks, Takaful companies, the capital market, and then, well, it depends. You can have a money market like you have in Malaysia, an Islamic money market. You could have a development finance pillar. You could have a fintech pillar that can stand on its own, but you need to close that gap and customize it to what West Africa really needs. Think about a small business that has 50 to 100 employees. As that business grows, they need a source of capital to grow. And they look for Islamic. They need guarantees as they're conducting trade, and they look for Islamic. For asset trade financing, consumption financing, they would need that as well. I'm looking at my stopwatch. I have 5 minutes. You say 3 minutes. But anyway. Employee payroll, short-term liquidity. So there is a complete ecosystem here that any small company would need. The Islamic finance value chain can really be tapped to support that business from beginning to end. Employees, they need Takaful. They may need not just general Takaful, but also life Takaful and medical solutions. Cooperative Takaful, which has not really been explored. Takaful in itself is just at the tip of the iceberg. It's a privilege to have been involved in the original design of the Waqf model way back in 2004 in South Africa. We designed that, and now it's followed in Pakistan, and alhamdulillah, we see it's followed here in Nigeria as well. That is an excellent solution for achieving this social impact that we're talking about. Now, in the last part of our discussion, I'm going to highlight the VBIT concept. And here, when you look at Malaysia's approach to Islamic finance, it's very much value-driven. And to enhance this entire value chain, we must ensure that we constantly create value. And how to create value? Well, we need to have a responsible framework. The value-based intermediation framework does that. It fills the gaps that the SDGs and ESG have when it comes to Islamic finance. Specifically, the gaps around social impact. That's where you see VBI shine. Now, VBI really takes care of the Islamic banking side, and these are some of the successes, by the way. I'll just highlight one in particular. Over the last year, which is in 2022, 35,000 deserving people received houses through affordable housing. And affordable house financing, that's Islamic affordable house financing in particular. If you want to look at other approaches or successes, 1,000 public infrastructure accounts supported through Islamic finance, 100,000 SMEs. But this is our concluding slide, and if you look at this, this is where we see the value chain really being enabled for West Africa. And that means that you need to look at the value-based approach in Malaysia that applies value-based intermediation Takaful. Again, I've had the privilege of leading this project in Malaysia and drafting the first version of VBIT. And one of the key elements we introduced in value-based intermediation was the first one, financial resilience. Financial resilience is a specific contribution of Islamic finance. It ensures economic empowerment and protection of vulnerable groups. And this is a long-term objective. If you are protecting your vulnerable communities, if you are empowering and building those that are less advantaged, then you are creating customers for the future. It's not a welfare initiative alone. It is a commercial, sustainable initiative for your company. Of the 5 underpinning thrusts, you have key outcomes. And although it's not very clear in the screen, what these underpinning outcomes are is really to make sure it's measurable. Because if you have these fancy thrusts and you don't have clear indications or indicators that are measurable with KPIs that can be tested, that can be incentivized, well, then you can't really implement this easily. CEOs in Malaysia today are incentivized, their KPIs are driven by social impact. It's not just driven by bottom line. It's 3BL all the way, triple bottom line. The success depends on the key indicators. The impact features are in line with the national agenda. Risks of over-regulation for values and sustainability exist. Sometimes the regulator says, you must be sustainable. Where is your value creation within the value chain in terms of climate change? And then you go on issuing fancy reports about how many people you financially included and what you've done for the climate and carbon emissions, etc. But oftentimes that's just a green shine. So we've got to make sure that it's a sincere impact through social integration. And ultimately it's the Sharia scholars as well as the board and the executive management that play a role. The Sharia scholars as ethicists, they are really ethicists. What they've got to do is implement value-based intermediation, ESG, SRI objectives within the value chain through their Sharia decision making. It can no longer be that they are testing for Sharia compliance based on the prohibitions alone. Because if you really want to look at prohibitions, anything that creates harm or causes harm, al-maqsadul a'adam, dar'ul fasad wa jalbus salah. As Ibn Ashur said, the highest of objectives in the Islamic law is actually to remove harm and to do good. Well, then are we including that in our Sharia decision making and guiding the companies we supervise to actually achieve this social impact? Well, then that's the question. And I end off just with perhaps a call to action. Conferences are great, but they can't be simply talk shops and networking events. They need to be more than that. And to be more than that, the last point I'd add here is that going forward, NIFIAN and other organizations or institutions like Nur Takaful themselves can initiate a working committee that can start helping to draft a synergistic framework where you're working together. A lot of discussion has been around collaboration. Now you work together to actually achieve social impact, not to appease the welfare scenario, but to really strengthen your own customer base, if you want to look at it that way, and really achieve profits for the long term, not just the short term. I'm going to end there, and perhaps there's going to be interesting discussion from the panel. I thank you for your patience, and thank you once again to Nur Takaful for the invitation and the excellent organization and effort you've put in to this inaugural conference. Well done. Thank you very much. Assalamu alaikum wa rahmatullah.
Thank you so much, Professor Ziad, for that very enlightening and interesting presentation. So I'll just summarize very briefly for like a minute before we go into the discussions. So one of the things that Professor Ziad spoke about was that we should learn from adversity and protect life, asset, and income. He also emphasized the Islamic finance ecosystem, the effectiveness of which is based on the PPP, which is private-public partnerships, and added philanthropy to it. And that's because the essence of Islamic finance is social impact. And then he also emphasized that for Islamic finance values to thrive, there has to be innovation, good conduct, driven by regulation. And finally, which I find very interesting, is the value-based intermediation, which he spoke about, which is like a response to ESG and SRI, which is social responsibility investing. And the bottom line is financial resilience, entrepreneurial mindset, self-governance, community empowerment, best conduct, and capacity building. And he believes that if all of this is done, then you have good products, good banking, Islamic banking practices, which will lead to impact, which is people, planet, and profit. All right, so I'll go to Akim first with my question. First question for today. So, Al-Hassan, you've been in the banking industry for quite a while. So do you believe that we are now on the verge of an effective Islamic finance ecosystem in Nigeria and Africa? And what can we do to position ourselves for the next level of growth?
Assalamu alaikum wa rahmatullahi ta'ala wa barakatuhu. Good afternoon, ladies and gentlemen. Well, I would like to look at it from one, defining some of the basic terms that are from the question. First, what is an ecosystem? From the point of science, which was my background, ecosystem is a community or a group of living organisms interacting together with each other in a specific environment for the development and growth of that environment. While we know what Islamic finance is, providing financial services based on the rules of trade and commerce in Islam as guided by Sharia. So do we have an effective, or are we at the verge of having an effective Islamic finance ecosystem? Well, I think the Nigerian environment and Africa in general, it's nascent, it's evolving. In a country of about 250 million or so, when you have only 4 Islamic banks, only 4 insurance companies, almost no microfinance bank, no Islamic mortgage bank, definitely you will not see we're at the verge, but then we are evolving. Like one of the first speakers said earlier today, in year 2000, it was, I think, Toyin or some other person, in year 2000, we don't have any of this. Now, we have 4 of Islamic banks fully licensed and 1 other bank that has a window. So we have really started the process. We're there, but really we need also to do more to be able to have an ecosystem where Islamic finance will thrive. And then what do we need to do more for this ecosystem? The current players, in my own opinion, need to collaborate. They need to work a lot together so that the value chain we're talking about will really come to be. When you talk about providing a finance for a bank to finance its customers, they need to identify and mitigate some of the risks associated with these businesses they are financing. And the next in the Islamic finance value chain is, of course, to look for an insurance company, a Takaful company that will provide that risk transfer services. So in this, you have 2 members of the Islamic finance community collaborating, providing service within a trade or manufacturing value chain. But where we see a lot of that more working is in a typical sukuk that has been issued. I know everybody knows the federal government has issued 5 sukuks. So in that sukuk issuance, you see the capital market players playing the role of issuing houses, the banks coming to invest their excess liquidity in it. The Takaful companies are also coming to invest, the pension companies also investing. And at the same time, along the value chain, monies raised from the sukuk is used to construct roads. Companies are getting jobs to do. A lot of employments are being created along the line. And then the federal government is getting funding to meet one of its necessary responsibility to the citizenry, providing good roads. This is a typical example of where a value chain works perfectly with so many players participating and the benefit coming out for everybody to see. But again, like Sheikh Ziyad said in one of his lectures, there are also challenges. There are other things that we need to do more, that the value chain should really play and provide the kind of services that are required. I will give you a typical example. In my bank, a couple of years ago, 2018, we started a product that we called Jai's Financial Inclusion. While writing the product, this is typically a microfinance product, but then we want to make it with a difference, with a difference, not like the normal microfinance. So funds were allocated by the board specifically for this as a pilot program. If we make money in it, okay, good. If we don't make money, this money has been allocated for an R&D. And we went to a very far village on the borders of Nigeria and Niger in Meadua, where we set up a simple structure that doesn't look like a bank. But while coming up with the product, I said, if we are financing women, giving them 5 to 50,000 to be teaching them first what to do about business, about management, then giving them money to do business based on mudaraba, to share profit. We also need to bring other things. We need to do a takaful, comprehensive takaful on the business if anything happened. But we now said also, part of the major problem where women in the villages lose their capital is in health management. Once their child is sick, they take him to the hospital, they use their money. So the next is, let's look for a micro takaful that will provide health takaful that will cover these people. We couldn't get that in the whole of Nigeria.
Thank you very much, Al-Hassan.
So I think we need to do more in that area, and I think a collaboration and also innovation will be able to do that for us. Thank you.
Thank you so much for that, Al-Hassan. So I'll go very quickly to Dr. Abidin. So you've worked with the IFSB for quite a while now. How far has regulation gone with supporting development of Islamic finance value chain? And do you anticipate any guidelines that might come in for the next level?
Okay, Bismillah ar-Rahman ar-Rahim. Thanks so much for the question. I think I'll divide it into two. The first one is relating to whether regulations have been able to support Islamic finance value chain, which I consider as a concept that has a considerable diversity behind it. It offers an illusion of clarity, but then it remains sufficiently vague. The tendency is there to view value chain from a strictly economic point of view. But based on the presentation by Dr. Ziyad, it would appear that from an Islamic finance point of view, it's way more than that. It would involve maybe a range of activities that are value-adding and are Sharia compliant, that generates value not only to the customer, but even among firms, because it can be vertically linked and as well as horizontally linked. When it's vertically linked, you are looking at an interrelated kind of activities that generate value to the customer from origination of a contract till the closure of the contract itself. So it's a whole wide spectrum of activities. And in the rendering of the service, it can also be horizontal because there are organizations that would complement activities. The bank offers the financing, the insurance provides the coverage in terms of risk, the fintech firm is providing services that make the activities to be seamless and things like that. So the value chain would also be looked from that point of view. But whatever it is, I think from an Islamic finance point of view, the distinct feature here will be the fact that we should look beyond the mechanics and start looking at the spirit of Islamic finance in itself. Because the tendency to converge to conventional will be there. And there will not be so much of difference that you can see. But when the spirit dimension is also brought into it, underpinned by the essence of the deen itself, which is based on Sharia, and the principles of removal of hardship, distributive justice, public interest, and so on and so forth, would make that value chain to be very distinct. So how does regulation support this. I think yesterday I reeled out a few standards that the IFSB had issued, 41 of those. So if you view value chain as a stream of activities, then you will not have just one standard looking at value chain. It will be standards that address each aspect, from inclusion to disclosure to conduct of business to risk management to Sharia governance, corporate governance, and so on and so forth. So the IFSB has done very well in that regard. However, if we bring it to the second part of the question, which you have asked, that are there new guidelines that we can see? I think Dr. Ziad has just mentioned one. Now, a lot of activities are going on across jurisdictions. We have, for instance, in Malaysia, the Socially Responsible Investment Sukuk, that framework that was issued in 2014 by Securities Commission Malaysia, the value-based intermediation investment and financing framework that was issued by Bank Negara in 2019. Saudi Arabia also had issued as well as Oman. They had both issued the Sustainable Debt Financing Framework. And ISDB, has also issued its own Sustainable Finance Framework. So all these are classic examples that I think other jurisdictions may not necessarily have to start from scratch, but they have to localize, look at these global best practices and how it suits their local environment. Their regulation, in my view, would be able to support the Islamic finance global chain, Islamic finance value chain. Thanks so much.
Thank you. That was excellent. So I'll go very quickly to Akim Oyewale. So Professor Ziad mentioned value-based intermediation. Do you think that the African Islamic finance market is ready for this? And what do we need to do to effectively harmonize Islamic finance with sustainable finance to achieve the ultimate social finance objective?
Thanks, Toyin. I'll go quickly to answer the question and be direct as well. I think the answer is no. I don't think the African market is ready for the value-based intermediation. And there are a number of reasons for this and some things that we need to do. Just like Dr. Abidi mentioned earlier when he was speaking, there are still a lot of regulatory bodies in Nigeria, in Africa, that are yet to actually implement or effect the adaptation of either SRIs, SDGs, in all their policies. The Nigerian SEC, for example, in April 2021, they issued principles for sustainable finance, and they said it is not mandatory. And to that extent, no CMO today that I'm aware of has actually complied with those principles. Okay. Now, when you've issued principles for 2 years, no acceptance, no adoption, it's difficult for you to now think that value-based intermediation can come in very quickly. So that is the answer. The answer is no, we are not ready. Now, what can we do to actually push the envelope? I think there are about 3 key areas that we need to actually work on. The first is capacity. We need to know very quickly and enhance the knowledge by everybody that's interested in Islamic finance, what Islamic finance is all about, what SDGs, what SRIs, what they are all about, and why value-based initiatives should be adopted. We need to teach ourselves, we need to learn about it, then we can now talk about making it a policy along the line. The second thing is regulation. If you make a lot of things to be voluntary, you are not likely to get adoption very quickly. And I think finally, I would say awareness. If you have the policies, if you have the capacity, and a lot of people are not aware, of the availability of these concepts, then you're just winking in the dark. Thank you.
Thank you so much for that, Akim. I'll just ask Professor Ziad one question before I take 2 questions from the audience. So, Professor, how can a developing Islamic finance value chain mature into a system that embraces social impact scorecard?
The most crucial element here is not to consider it as a CSR, not to consider it as something that's a nice to have. It needs to be integrated within the corporate value intent. Examples like Bank Islam Malaysia, where they've actually over the last 5 years really converted their approach and their strategy to integrate this social impact as part of their profit-driven initiatives. They have social finance units, but at the same time, their products are looking at more responsible approaches to deliver, to cover the variety of customer economic scenarios. So this is how I think it is. It shouldn't be seen as something that's corporate social responsibility. It should be seen as part of the business initiative. You're doing profit, you're making profit, but you're doing it responsibly and ethically.
Thank you so much. So we need to integrate into Islamic finance. Fantastic. So we have time for just 2 questions. So does anyone have any questions for our gentleman over here? Any questions? Oh, okay.
Thank you, Ms. Moderator, and thanks to the members of the panel. I think my own looks more like a comment, not really a question. I want to pick from what Professor Sheikh Ziad mentioned, value-based intermediation. I remember in Malaysia they have a slogan attached to this, beyond profits. Value-based intermediation beyond profit. And I think the problem here in Nigeria and elsewhere on the continent is how far have we been able to bring this to reality? This issue of looking beyond profit. The only benchmark for assessing the success or failure of a financial entity, Islamic financial entities inclusive, is how much profit it is making. So, and this is what will not encourage the players to pay attention to the social impact of what they are doing. Because what matters is what amount of profit are you able to bring to the table at the end of the year. So I'm appealing to us, members of the public, as consumers of the product, Islamic financial product, and to the shareholders of Islamic financial entities to please look beyond profit in assessing Islamic financial entities.
Thank you so much for that, Professor. And it's really true. I mean, 2 panels before us, it was emphasized that the ultimate benefit of Islamic finance is the social impact, which is sadaqah, zakat, waqf, and takaful even. All right. Do we have time for one more question? Okay, so I think we're done for today. Thank you so much, panelists. Thank you, audience, for listening to us. And we hope you had, you got away with a number of points. Thank you. All right.
Another round of applause, please. Thank you. Now, our next conversation today, our 5th panel, looks at Sharia as a business driver. And the person who will be moderating this particular conversation is an Islamic scholar through and through. Dr. Mudashiru Atanda Kolawole Bada is the chief imam of Oluyole Estate Extension in Southwest Ring Road, Ibadan, Oyo State. His education background spans St. Paul's School, Nguru, the Arabic Institute, Nguru, and Pitman's Institute, London. He began his career as a certified public accountant with the UAC Group Textiles in Ibadan. Later, he moved to the insurance division of the same group, United Nigeria Insurance Company Limited, where he served as the Ibadan branch accounting superintendent. He was invited to join an international insurance broking firm, Femi Johnson & Co. Limited, and this is where he worked as the pioneer accountant and eventually became the firm's pioneer executive director of finance. 7 years ago, in recognition of his scholarship, the International Chartered World Learned Society awarded him with the titles of Outstanding Chief Imam of the 21st Century, Life Fellow of the Society, and Grand Patron of the Society. He recently was awarded a Lifetime Fellow of the Crown University International Chartered. This was as recent as May this year. It is my pleasure to bring Imam Bada onto the stage to host this conversation, Sharia as a Business Driver. Please put your hands together as he makes his way to the stage.
Good afternoon all. Allow the music to play on. Is that Grover Washington Jr.'s music. I heard it and I'm so fascinated by it. I like to play on. Who is on the music platform? Let it play on. For those of us who love jazz music, and I'm one of them, let it play for a while, for just half a minute. Thank you. That's a great one. I'm motivated by it. And for those of us who've been slumping, maybe drooping our heads, that's a good one for us. Music by Grover Washington Jr. Thank you so much. Indeed, before I call on my panel, my desire is to first appreciate those who package this theme. And I've been thinking, I have a wife for the last 50 years. And from the Islamic point of perspective, I think I have a right to 4 wives. And I'm thinking of taking the 3 additional very shortly when I'm 80. And I'm going to ask those who package this outlook of a green outlook, even though the Nur Takaful concept of color is blue. But I look at the whole concept of the setting as green. So for those who package it, Mr. MD, sir, are you there, sir? I'm so far on package event that when I'm taking my 3 additional wives, I want them to come and package the whole in the Ibadan. I hope the MD is listening. That's one. The second is the list of those you did invite to come forward and talk. We're talking of the excellence in the desire to be able to do some kind of innovation, which I found since I came in. Yesterday I was watching the hall on NTA, and I was saying, people in one know the cameraman was able to take the concept of the whole aspect from the door, last to the straw. And I was wondering, I hope the board eventually approve whatever cost you did incur. Mr. Chairman, are you listening, sir? Don't disagree with whatever the cost that comes in terms of the projection against the actuals. I know the actual probably will run beyond the projection, seeing all you've spent. And that was why when we were being asked to come for tea, I refused to take one, so it doesn't increase the cost. The other one is the aspect of check distribution. I was asking the lady, when are the participants going to receive their check? Are you there? Is it when the curtain is drawn, we can come back for our checks? That's a good one. Well, what I would do before calling on Prof and my other panels, I have some emulative matters which I feel I need to, within the concept of time. And I hope the lady timekeeper does not come to me this sleep, say, I was going to do, sir. So don't come. Protocol. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم اللهم صل وسلم وبارك على سيدنا محمد وعلى آله وأصحابه وسلم أجمعين. بسم الله الرحمن الرحيم. إن ربكم الله الذي خلق السماوات والأرض في 6 أيام ثم استوى على العرش يغشي الليل النهار يطلبه حسيسا والشمس والقمر والنجوم مسخرات بأمره ألا له الخلق والأمر تبارك الله رب العالمين وتبارك الله أحسن الخالقين. I celebrate the praise of Allah, the one and only, the creator of all, the director of the affairs of humanity, who gave to you behind the corporate veil of Nur Takaf the essence, the wisdom, the spirit to be able to package this, which to me is the flow from that which you did in a battle. And indeed today, I'm not supposed to be here because a senior brother of mine died last week and his 8 days today. But because of the interest I have for those behind the corporate veil, I'm fascinated. I'm not used to flattery, I'm too frank. When I see things that fascinates me, I talk about it. When I see that is odd, I mention it. This is fascinating. And glory be to the Lord for those behind the corporate veil of Nur Takaful. Saluting the wisdom of those behind the corporate veil, praying for sustained enlightenment as this. This maiden one in Lagos, to me, maybe you've done it before, is novel. And I want to salute the courage, the emulative courage. And again, the cost benefit I know will be enormous. By the time the cost is drawn up, the projection against the actuals, whatever be the runover. Mr. Chairman, sir, I'm sure next year there shall be runover. Again, saluting the academics, the intellectuals, the panelists, those you did select from that aspect of your selection. They did well. They all spoke. And I'm speaking again on their behalf. That thank you for bringing us to the forum of public or international glare, bringing people from overseas. Yesterday on the screen I saw His Royal Majesty, the Emir of Kano, and I was watching. You must have spent a lot in bringing Baba, because it's the kind that does not go out unless it is very, very necessary and vital. For those who brought him, for the shuttles you did to be able to bring him, congratulations again on that. The other, again, is the structure of your establishment, the style, the strategy, the skill, the staff, the kind of staff you did desire, for the commitment of that package kind of result. And I'm fascinated by it. I can see the graph rising from 2017 of 12 million, 15 million in 2018, 36 million in 2019, 109 million in 2020, and 2021, 208. That to me is a sense of commitment of those concerned. It gladdens my heart that when the MD came up to give credit to those behind him, I again want to salute the directors for giving him the sense of ability to perform. Sometimes you get this encroachment into the essence of performance. And you head back to blame the managing director when too much instruction keeps coming. Then there's the diversity of how he handles matters within the concept of the setup. But the structure in Nur Takaful, I'm not part of the structure, nor even the system. But for him to have come to give you credit, for those behind the corporate veil again, I say, glory be to the Lord in heaven. I only pray that the entire concept of this forum receives the blessings of Allah and the admiration of mankind. I pray and I pray. I didn't see anybody say Amen. I hope this is my submission before I call on my panel. Well, again, I have 3 aspects of banners which are brought over. I don't know whether they were placed or rather showcased at the door. Emily Dickinson's philosophy and I'm quoting her now, we never know how high we are till we are called to rise. If we are true to our star, our stature touch the sky. For those of us who are Yoruba, wala ki mo yareni odijọ́ tí ẹni bá dé gòríta tó bá pẹ́ lóòótọ́ ìràwọ̀ àbí lọ́lọ́run fi downtown orí àkànkì ẹsẹ̀ àtólẹ̀. Well, may the stature of Nur Takaful continue to touch the sky, now always and forever. That's Emily Dickinson's philosophy, which I did define in Yoruba. The other one is whoever is capable of self-renewal is a living being. That's Frederick Henry Emile. Whoever is capable of self-renewal, what you do in self-renewing, otherwise the graph of your growth couldn't have attained that level. That self-renewal should continue on sense of commitment to duty, the desire to go beyond just the ordinary, and the competitive edge within the insurance industry. Basic. Let's look into that as well. That is the second one. I think the third one is mine, and that's my own philosophy of Alhaji Muda Sirachunda Bada. I talk great men. And this is from the chairman to other members of the board. In obstacles, inhibitions, and challenges lies the strength and hope of great men. They never renege nor withdraw in their quest for a breakthrough, in bracket, despite the storm, until they reach the coast of victory. Never should you ever have a draw, G-R-A-W-L, in your concept of performance and the objective of Nur Takaful, because you're all great men. Never withdraw, despite the storm. Ensure that you reach the coast of victory. A ship that sails without reaching the coast of victory did not sail. An aircraft that took up from ground and never reached the destination didn't fly. I'm asking the Lord in heaven to allow you to fly, to reach your destinations, and may your ship keep floating until it reaches the coast of victory. Allahumma ameen. If nobody's doing that for you, I'm doing it for you. And that's for those concerned. My submission. I can now call on my panel. It's my desire to head back to Ibadan around 1. But I'm sure for those of you who are with Rolex, my time is just after 2. I want to Rolex. Rolex, I'm told, does not even give time. It also tells history. I'm sure when we head out to this hall, the perspective of the history by the rapporteurs was also the fascinating. Now, my first panelist is a guru, a chief executive officer of Marble Capital. He's just featured now, and that shows the intelligence in him. He's featuring again for the second time. Hakim, are you there? Oyewale? Please stand up. A round of applause for him. Well, I shan't profile him beyond just, he is currently a member of the Security and Exchange Commission, and that's the financial literacy of this nation. Security and Exchange Commission of Nigeria. He must be upstairs. That's what the American call the egghead. What mean Hakim Ori Egg Loni? Thank you, sir. Come forward. I salute you, sir. Please take your seat for the second time. Please sit down. Wishe. Next in my panel is Shehu Ismail Rufai Ola Inka. Inka, are you there? Mochiri Leko. Inka, are you available? Wow, he's not there. Wow. No. Walk, baby. Camera, me back or to log by. He's just hiding behind the camera. Let the camera pick you. That's Haji Ismail. A round of applause for him as well. He's a financial literacy guru in Islamic finance advocacy. Thank you, Hakim. Please come. And as a prudent spending specialist, not extravagance. You teach me how to spend when you finish. What's of machine know that the second member of my panel, and the third is a professor, Warsho Rabiu. Kana kwende mala? Professor Rabiu kana nene? Madallah. nan da nake so bana kawai wallahi so nake da doya ta ganka dai yau dai zuwa kai za mu yi irin wa'annan cikakken labaran ta Takaful. Allah Ubangiji ya samu dace da darajar ma'aiki don Muhammad Rasulullah. He's a lecturer of Bayero University in Kano, Department of Islamic Studies and Sharia. Malam dai matso dai mu gasa kawai. Alhamdulillah. Thank you, sir. Please sit down, sir. Madallah. Next on my panel, and not the least, is the center of gravity. That is Professor Onogun at the Salam. He's the speaker. He's the guest lecturer of this forum. Maybe the last one. Professor. A round of applause for him. His package is submission. He's a professor of Islamic Economics and Finance, a doctorate degree from the International Islamic University, Malaysia. Professor Abdul Salam is a member of the Advisory Council of Experts for Nur Takaful. Professor, welcome, sir. Good to see you. Please take your seat, sir. Now, the package is done. And I'm going to ask Prof to add pour, to add delight, and I'm sure we'll all give him the audience to be able to outpour. He's written a lot, and I did tell the MD that I know he's PowerPointed his submission, and I did ask for a hard copy, which I've gone through and look at the critical success factor of his submissions. So, Professor, imagine, sir, I'm not going to ask you questions outside the concept of your submission. And if I do, you are a professor, you must answer it. Thank you, sir. Now, let me head back to the seat. There are two books that I brought, and my MD sir, are you there? This is Mindset, Dr. Rec. If you don't have it in your library, please let it be there for your staff, for orientation. And the last straw is this woman, Susan B. Anthony, Susan Brownell Anthony. I read a lot of her books, Failure Impossible. And I want this book to be part of the concept of your library, MD, if you're there. I'm not going to give this away, but in any case, I want to keep it and ensure that failure of Takaful is impossible. Insha'Allah ta'ala.
And we will not fail.
Thank you, sir. Prof, the stage is yours. Head back to the podium, sir.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله رب العالمين.
I think you need this. You need this one. Much better.
الحمد لله رب العالمين صلاة وسلاما على رسول الكريم نبي جاء بكتاب كسمشي في دواها وجاء بسنة. Mr. Chairman, there's this saying that the Sharia people, they don't understand the business. So in order to do, I don't want that to happen here, because as I said yesterday, time is money. Islamic finance, either banking, Takaful, or capital market, is a fi sabilillah business. So it's not because of Sharia. Because of this, Islamic finance is not a fi sabilillah. Takaful is not a fi sabilillah business. That is the reason why when the standard is developed from the IFSB, because the time I was in IFSB, so they developed standard for Takaful undertaking. The reason why the IFSB use the word Takaful undertakings is that most of the people, they are thinking that the business, Takaful, is just fi sabilillah. If you don't have money, you can go there, or if you don't have anything, so it's not a business entity. So that's why they use the word undertaking to make that Takaful is a business undertaking. It's a business arrangement between the Takaful participant and also the Takaful operator. So these are the things, arrangements. That's why they use the word takaful. Because if you use the takaful business, so this is the reason why that in our presentation today, we are going to show. So this is the presentation outline. Why Sharia in Islamic financial institutions? Not only in Takaful, but why Sharia is important in Islamic financial institutions. Or why it is the finance is the driver of the business. Because we will know the reason why. Why Sharia in Islamic financial institutions? I mentioned yesterday that in Islamic financial institutions or in Islamic finance, anything finance, insurance doesn't have religion. Banking, financing is finance. Banking is banking. Financing is financing. But the uniqueness, why Islamic finance is dealing with it is because of the Sharia itself. Because of there's no any injustice in Islamic finance. The same thing also in Takaful. Because in insurance, that's what I said yesterday, that in insurance, you can buy insurance. But in Takaful, you cannot buy Takaful. You participate in Takaful because it's a win and win insurance. This is the slogan of Nur Takaful. The reason why is that because if you say buy, it means that it's a contract of exchange, which is against of Sharia. So, if you look at the financial institutions, we have banking, which we have insurance, we have capital market. In the banking, it's a transfer of money. That's why in Islamic finance or in Islamic financial institutions, either in banking, takaful, and capital market, it is the basis that they deal with money. But Sharia doesn't want us to deal with money. That's why they deal with the commodity. So look at the reason why I said that banking is banking, financing is financing, insurance is insurance, is because of what? It's because of Sharia. Any deal in Islamic banking or in takaful undertakings is you have to have compliance with Sharia rules and principles. So the regulators and the IFSB, they see that anything you do, and in Islamic finance, in the takaful, we have to look at it as a professional approach. That is the problem for people when they hear Sharia, either banking or takaful, they wear Sharia, they don't understand. Even though most of them say that the Sharia scholars, they don't understand business. That's why maybe they don't give them the opportunity to see Sharia professionals who are CEO, Sharia professionals who are MD. So because at the beginning they are saying that they don't understand the business. And the Sharia people, they are the ones who understand the business because all the Islamic financial institutions, the Sharia is a business driver. If it's not complying with Sharia rules and principles, so you cannot have Islam, you cannot have takaful. So that is the importance of this Sharia. So what is Sharia? Okay. What is Sharia law?
The Sharia is a practical defined law which has to be legitimate from the primary sources, which is the primary sources of Sharia is the Quran, the Sunnah, the Ijma, and the Qiyas, the analogy, the consensus and the analogy, with other secondary resources which we are using in the banking or in Takaful. For example, in Takaful now, the basis for using the policy or the contracts, it is anything Islamic finance in Takaful is based on the contracts. That's what the Takaful itself, it is legalized because of the Sharia, and they consider it as Uqud Tabarruat. That is why we have the word Tabarru commitment. So, because that is what I said before, that Takaful, you cannot buy Takaful. You cannot sell Takaful. You can participate in Takaful. Because if you say buy Takaful, Takaful will consider as insurance, which you can buy and sell. And this one is Uqud Mu'awadat, which means exchange contracts. So, and that is the basis that they say that Takaful insurance is not permitted. So, when you say that because of the Sharia, as the driver of this entity, the Takaful entity, they say that, okay, it is acceptable based on the Uqud Tabarruat. Okay, so the Tabarru commitment. So these are the things that, and in the Sharia also you have, this entity need to be regulated. So this is the role of ACE. That when you say that we need an expert in the Sharia, and also I would like to suggest, because in teaching Sharia in Islamic finance or in the universities, so we have a course which is developed in my university, Hamdan Muhammad Smart University. So the course called Sharia Business Law. So Sharia Business Law will discuss how it is not the thing that you can see. It needs to be developed in order for the student to be understand or to be useful in their future career. So here, the regulators started to see that we have Sharia board, and what is their role? People think that the ACE, they're just in the market just to collect money. So this is the thing that they have to be regulated. What is their role? And their role now creates another field of specialization. Because as Sharia compliance officer, based on the regulation, that each bank, because of Sharia, each Takaful, you have to have Sharia in place because before you can start the business. So these are the things that this also creates the Sharia compliant officer. We have to have, it is responsibility now is now have 3 or 4 responsibilities. One of it is that to do the Sharia audit, which we call internal Sharia audit, and we have also Sharia control, which is Sharia assurance, which is a part of the internal Sharia compliance or assurance, and it has to be the secretariat of the ACE. So these are the things that if you look at the the Department of Compliance either in the Takaful or in the banking, you will see that we have internal auditor. So these internal auditors, they are trained. They have, they have professional training, which they go through. The same thing, the Sharia assurance also, they need to go, the internal Sharia audit, they need to go for training. So these are the things that it is also recommended that in the Islamic finance, or not only in Takaful, they have to have how these people, to have training them. It's not the time of the knowledge which they have they have in the university, I will say, because all these things they need to acquire by experience or new area of knowledge in the Sharia itself. So this is how we can see that Sharia is one of the things which is very important. So we talk about Sharia ruling. Sharia ruling also is what we call in usul al-fiqh, we call it al-hukm al-shari', Sharia ruling. Because whenever you see a contract or a product, in the Sharia you have to have, the ACE has to have the ruling for this. So this is how important to know you look at the evidences, either from the sources of Sharia, in order to know this hukm Sharia. So when we are drafting the Sharia governance in IFSB, is one of the requirements for the Sharia officer or for the ACE, the Sharia board, you have to have a specialization in usul al-fiqh. So this is the reason why, because in order for you to know the other 10 days, you have to know the ahkam, okay? Ahkam shari'. So this is the thing that how you can apply these issues on Islamic banking or Takaful products. So Sharia as a regulatory requirement for Takaful business. Yes, this is one of to know that how important is this topic. I've developed the paper, so for those who are interested to read the paper, so you can send me the email, so in order to forward it to you. So it's one of the regulatory all over the world, where you can see Takaful, or you can see banking or capital market, Islamic finance institutions. So you have, before you can give a license, based on the IFSB requirement, you have to have what cannot give the no Takaful to be as operator and other operators as well, only after they have already verified and satisfied. So the same thing will happen. So this is the thing that how Takaful is a business. It's not feasibility business. It's a business. It's not only for Muslims. It's a business that the Sharia is, and also the internal Sharia auditor or internal Sharia compliance, they have to have the professional approach in order to help the business operate well. At the same time, to be compliant, to be playing field together with those in the conventional insurance, and to have a Sharia also as a professionals. So we have the internal Sharia auditors. They go to the trade. They have the requirements of a professional. They have a go through it, and they pass it. That they become Sharia. They become internal auditor. The same thing also need to to be fulfilled in the area of Islamic banking Islamic banking and finance. One of the things that the other region, which I know is in the UAE, the Sharia professionals, they have a meeting together with the Account Federation of UAE. I was there in order to have, because one of the challenge which keeping happen is that when the internal auditor, or even the external, when they came in order to do the audit, they cannot do they cannot audit the Sharia because they are not eligible in order to do that. And those who are in the Sharia, internal Sharia auditor, they are not have the training. So we need the professional approach on this. So what the UAE do, the Sharia professionals, we go there in order to have a meeting together with those in the Federation of UAE accountant and auditors, in order to have the meeting with them. We discuss, and then we come to a final solution that this is the thing that to have to working together in order to make Islamic finance and Islamic financial institutions at the level field, playing level field together with the conventional counterpart. In order to make it, in conclusion, is that we know and we understand that Takaful, Sharia in Takaful undertaking is now gaining its alternative for the conventional insurance. And with the Sharia, and we know that the Sharia is the driver of this, all the Islamic financial institutions, including Takaful. So we need to look at it at the professional approach, as I said before. So, and in order to make it grow and to help it, we need to develop ourselves and look at it at the professional approach. At the same time, working together in order to have to develop the more understanding and more understanding of Takaful in the region, in the African region. So these will help in order to make Noor Takaful and other Takaful operators in Nigeria, to make them a leading in the operation of a Takaful undertaking. Lastly, is that the industry needs a potential for the good and prosperity of a Takaful undertaking, of Takaful business, in order to make it, to make it one of the leading, to show that Islamic finance is one of the best alternative for the humankind. The Takaful is not only for Muslim. Takaful is not a fisabilillah, business. So it is to help the humanity and to use the social finance contract. So to use the social finance in order to help develop one of the issues and the problem which we'll have in the Takaful undertaking. At the same time, we need to be to pray in those who the Sharia, the ACE, at the same time the internal Sharia auditor, to the management, to send them to a training to be qualified with their counterpart in the management in Noor Takaful and other operator to be competent together with the other staff in the compliance section or department in the North Takaful and also in the Islamic banking and other segments in Islamic financial institutions. Thank you very much. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Well, we'd like to thank Prof for that submission. Indeed, we've been asked that we have only 5 minutes more. And I don't know how long it took you, how many candles you've burned in the absence of electricity to be able to do the 8-page write-up. So I didn't want to just stop you. Basically, what I will do in my stead as the moderator, there are 3 keywords in the concept of the topic, Sharia business driver. And I'm taking Professor Rabiu up now. Sharia from the Islamic point of perspective, هو قواعد الشرعية التي جعل بها نبينا محمد من عند الله. How does Nur, or how would Nur Takaful not infringe with the law of Allah in terms of his injunctions, his admonitions and command? And قواعد الشرعية التي جعل بها نبينا, very briefly because of time, sir. How would they not infringe with the law of Allah in their outlook, in their commitment, in their business as well? Come in, sir.
Bismillah, wassalatu wassalamu ala rasulillah. Ladies and gentlemen, assalamu alaikum wa rahmatullahi ta'ala wa barakatuhu. I would like to start, if you allow me to, by congratulating Nur Takaful for reaching thus far. I've been part of the company, but when I attended this conference, the company, the value of the company rises into my head to an unimaginable position. May Allah continue to strengthen what they are doing and put them in the right path. Talking about Sharia as driver for the business and intercouple operation in particular, and Nur in particular, Sharia allows them to do so many things that they can earn halal income without violating Sharia rules. Sharia, as a comprehensive law of life that is attaching every aspect of human life, has 2 kinds of rules. There's rules that are very strict and fixed that cannot be crossed, like things that has to do with ibadat. You cannot pray 4 rakat for Salat al-Subh based on ijtihad. But when it comes to mu'amalat, Islam, Sharia have the flexibility and allow us to go as much as we can to innovate new ways of earning halal income, provided that we take into account all the red lines. We are not going to cross them. The things that has to do with riba, with gharar, with maisir. So these are the red lines that we cannot cross. As long as we keep this in mind, there is no restriction for the Nur Takaful in Sharia and for whatever Islamic financial institution to innovate ways in order to maximize their profit. And that's what Nur is doing. As a member of their Sharia experts, I can testify that whatever they need to do, they label it to us and we go through it vehemently. And we discuss, we argue, we do a lot of things. Sometimes we delay product for a number of months arguing about it before we just give it a green light to go. So therefore, to the best of my knowledge, what they are doing, they are trying 100% to be compliant to Islamic teaching.
That's a challenge for you when you head to the boardroom. Agree to agree, disagree to agree. Don't disagree to disagree. Don't agree to disagree. So the platform for you at the boardroom is non-infringement. ولا تفسدوا في الأرض بعد إصلاحها وادعوه خوفا وطمعا إن رحمة الله قريب من المحسنين. Thank you, Sir Prof. Sheikh Hakim, you're going to talk about business in relation to Nur Takaful operation. We're talking of business and the usual human intuition in business where some kind of unethical intuition comes in. But this is nur. We're talking of light. Nur means light. And there's a whole chapter for it, chapter 24 in Quran. How does nur takaful at the non-interest financial industry not infringe on the statutory requirement within the law concept based on your scholarship as an author and a scholar? Come in, sir.
Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh. So I'm going to be speaking essentially, like the chairman said, on some of the strategies and business ideas that I think that Nur Takaful must comply with to ensure that they maintain the leadership, of the Takaful industry. I'm going to be speaking about 2 or 3 main points. The first is, and I think the vice chairman dropped a hint yesterday, the first is that Nur Takaful must continuously innovate with products that meet the yearnings of the market. And the yearnings of the market are unlimited, which means that the market space for Nur Takaful is actually very, very vast. Okay, so that's the first thing. You must have innovative products that meet the yearnings of the market. The second thing, as much as possible, you should ensure that you do not violate the regulations of the land. The regulations of the land, and the additional responsibility you have is also not to violate the regulation of Allah. Okay, so as much as you are complying with NICOM regulations, you must also ensure that you are very, very close to your ACE members. Your products are always Sharia compliant. That is very, very important. The other point I would like to make as well is the fact that it is extremely important, for you to be sustainable. And while being sustainable, you must ensure you comply with all ESG requirements, you comply with all SRI requirements, and anybody that is very close to Nur Takaful must see Nur Takaful as an ethical Takaful organization. Just like the chairman mentioned earlier when he was speaking, I mean, this place, you can term it as a green environment. What it means is that Takaful, from a new perspective, should always be green. You must be in alliance with the people that are working with you, the profit motive that you have, the planet we are working, all the 3 concepts of PPP in sustainable finance, you must adhere to it. Then the final point I would like to mention is that you need to create a lot of awareness about your products. I mean, you can be doing all these fantastic things that we're saying from a business perspective. Have the right strategy. You are not in contravention of regulations. You are an ethical organization, but people don't know you. So you need to intensify your marketing potentials, your marketing strategies. Like this conference, it should go around the whole world. People should know what Nur Takaful is doing. Very exciting stuff that we are bringing a lot of people that are sharing a lot of ideas. People must know what you stand for, as that competent, ethical organization that is blazing the trail as far as Takaful insurance is concerned in Nigeria. I believe that if we're able to adhere to a number of these items I've raised, it should lead Nur Takaful to actually get into the next level as far as Takaful insurance is concerned in Nigeria. We must remember yesterday when the CEO of Sterling Bank was reeling out statistics about the quantum of opportunities available in the insurance sector. He practically said that the Takaful industry is non-existent. It's non-existent, which means that you are just 0.01 of the potentials that you can achieve. So I think you have a whole opportunity ahead of you. Please continue to maintain the leadership. Thank you very much.
Thank you for your submission. So the quantum of his submission is between the ethical aspect, the Islamic aspect, which is more spiritual in terms of never infringing within the concept of business, and the human intuition must not be allowed to come in. The last row, the driver, is the drive in this respect. I will remove the R for the time being. What drive does Nur Takaful desire to be able to have a competitive edge? The driver in this respect is the pathfinder or the navigator. Just like you have your driver who drove me down to Lagos this morning, and like you have the pilot in the cockpit, like you have the captain in the deck of the ship. Now, what is the driver that motivates the business of Takaful within the concept of Sharia? Come in.
Thank you very much. Bismillahirrahmanirrahim. I think I'll start my speech on the foundation that within the Sharia, everything is permissible except what is otherwise stated. So basically the misconception has been that people normally focus on the negativity that Sharia prohibit. But whereas the Sharia actually permits almost everything, but in the process of whether you are a driver driving a particular substance, so it means the permissibility and the acceptability of what you are driving is what now matters. So in the process of doing an halal business, the processes of arriving at your destination, meaning from the point of departure to the point of destination, yes, you have a car, but in the process, the action and reaction will determine whether that particular business entity is Sharia compliant or not. And in Nigeria, for instance, in the capital market or the Islamic finance ecosystem we currently have, we have the formal and the informal sector, and this sector intertwine, and they also depend on each other. The process of Sharia as a driver has also affected the issue of financial inclusion. Financial inclusion in the sense that there are people who are ethical in their decision, be it business-wise. If it's not ethical, they are not going to do it. And with that, if you are not innovative in creating good products that we can drive in the market, a lot of people will be financially excluded, and they will not be able to participate in the market. But we'll look at it like in the last 10 years. Now we have almost every player in the banking, in the Takaful, in the capital market, and also in the informal sector. You have people who normally do informal partnership with themselves, but they don't have any underlying contract whenever the business actually goes bad. But now you have people who are being enlightened through financial literacy projects like what we are doing today. But I think what we need to do now is that the focus should shift from the formal market. We also need to take it to the informal market, go to the market, enlighten people what are the principles guiding businesses. And with that, it will now make it more easier when some of them actually come to the formal market to seek for financing. They already understand the principle, they already understand the terms, they understand all the basic guidelines that happen. So if, for instance, of recent, the president announced intervention in the system, but I will tell you a lot of Muslims will be disenfranchised because probably the financing or intervention may not be Sharia compliant. So irrespective of whether the government have a good plan, some people will not even seek for it, and it affects the level of penetration in this particular regard. So, and Islamic finance is not basically charity in this case. So you can make higher profit than even the conventional. I can even pay higher than what the conventional market will pay. But my underlying principle is that I'm doing ibadah, apart from the profit I'm also making. And lastly, Sharia also doesn't stop us from making profit. And there is no any definition that will say this is the percentage of profit you can make. If you make 200% and all the participants are comfortable with it, fine. And if you also make 10% and all the comfortable with it, is also fine. So in the real sense, to drive is very easy, but in the process of driving, you also need to now look at the means of driving and before you reach your destination, to ensure that everything you'll be doing will be Sharia compliant. And we'll also now look at the objective of the Sharia, which is probably to protect life, protect wealth, protect property, and all this life. So these are what we'll be looking at the driver of businesses. So any business that will affect life is not a good business Sharia-wise. And every business that will also affect people's property, wealth, is also not a business that we need to now consider in. Thank you very much.
Thank you so much indeed. Our time is up. But even with it being the last straw of the panel, I suppose for this orientation. So in other words, your submission is continual orientation for understanding of what Sharia is. This is to Prof. In page 1 of your introduction, sir, you're saying, however, the Academy approved the use of mutual form insurance that conforms to the principles of Sharia as an alternative to conventional. I was asking, was it adopted and backed up by relevant law? Now, I'm not asking that you answer that now. I leave that to your research center. This is just my submission for the last part of the whole concept. I'm told that time is up. In page 3, even though we didn't number the pages of your paper, it was garbled. You say it is the practical divine law. I say practical divine law, Allah's injunction and command, e.g. simply a decree. Allah's law is a decree. So in other words, I hope those concerned are able to read through your paper. On the Sharia as basis for surplus distribution, you did advance an aspect of what a careful participant should always expect in terms of their belief, commitment to those, and the center of gravity. I say clearly defining the benefit accruing from participation in Takaful. How does the public enjoy the benefit? One, of understanding. Secondly, the concept in contrast to the conventional. That's for your research, Prof, because that time is up. What I did was the critical success factor of your submission. The last is Sharia as regulatory requirement for Takaful business. You did mention Sharia as the business driver of all segments of Islamic finance. Yes, I say quite. No ambiguity. Without digression, within the concept, with no human intuition coming in. You said the right thing. In other words, an instrument of function, or IOF, often thought in management is required, and an IOD, instrument of direction. In short, a blue book, I say, on ending orientation. The last page of your submission, in the critical success factor, referred to Takaful Sharia undertakings. It remains the best alternative. I say no doubt about it. And I did recommendation, but continuous orientation is required for understanding. The last is Sharia in the Takaful industry offers a huge untapped potential for growth and prosperity. I say quite. This area to be explored. MD, sir, are you listening, sir? In Prof's submission, this area to be explored and pursued practically in the period ahead. That is the last straw on the conclusion and recommendation. And I said, this is my submission. A research unit should not be set up, but the careful research unit who will research into the concept of your business and continuously present to the management or to the board the aspect of what the research they're able to find. This is our submission to the hall. We hope you've been able to agitate your minds into the concept of Sharia based on Prof's submission. And I'd like to thank my panel that even though we haven't got the time, you all want to outpour, but the time is not there. Time is against us because of the last row. Everybody wants to move back to his destination, and I'm heading back to Ibadan now. I hope a chopper is prepared. Taba for me, chopper. But I have to drive through the traffic. I think this is much better.
A round of applause, please. You can just come to the center for a quick photograph. For a moment in the beginning, I considered leaving the mic for Imam Bada to simply carry on with the conference. I think at that time I thought my work was done. Seems like a fitting replacement. Perhaps he was the real deal and you missed out on him and decided that I would be a good option. Thank you very much, gentlemen. Mr. Olayinka's submission to this conversation was actually apt because in the final bits of his contribution, he talked about ethics, talked about principles, and I thought perhaps as we go into what is the final panel of the conference, it would be a great idea to take a look at what the dictionary defines ethics as being. The Merriam-Webster dictionary says ethics is the code of conduct, of good conduct for an individual or group. Ethics, ethos, morals, principles, standards, all these words essentially mean the same thing. And our next panel looks to discuss the ethical considerations in insurance pricing. To moderate this session, Rotimi Okpaise, who's an actuary with over 30 years consulting experience, joins us on the stage. He has been the statutory actuary to many leading insurers across West Africa and has been the reporting actuary to 4 CPFAs and also the pension schemes of both the NNPC and PENCOM. Mr. Okpaise recently retired from Ernst & Young, where he was the partner leading the insurance sector and the actuarial services across the West African sub-region. Now, Mr. Okpaise is a statistics graduate of the University of Ibadan, where he was a university scholar. He's a fellow of the Institute of Actuaries in the United Kingdom, an associate of the Society of Actuaries in the United States of America, and an alumni of the Lagos Business School Chief Executive Program. Interestingly, Mr. Okpaise happens to be at a journey in his life where many of us look to be in. He is retired, happily so, and you can tell by the smile on his face. I cede the microphone to him, and he will introduce the rest of his panel.
A very good afternoon, ladies and gentlemen, and welcome to this session, which is headed the ethical considerations in insurance pricing. The ethical considerations in insurance pricing. I would just say a few things before bringing the panel on board. Insurance is actually one very different product. You know, if you buy a bottle of Coke, you will consume the Coke. If you buy a car, you will use the car. You know what you're buying. If you check into this hotel, you know what room, and you can choose what room, and you would use it. But insurance is actually futuristic in the sense that you're asked to pay a contribution for a defined event, but it will only occur, it's future. It will happen over the next 1 year, or it may not happen at all. So it's sometimes difficult to, if you like, know how to price for that. And this is where I really would find this session very, I look forward to it with what the experienced panelists and our speaker would be saying. The first panelist is Mr. Abdul Rashid Babalola. Mr. Babalola is an accomplished professional in the financial services industry with over 24 years experience in that industry. You're welcome to. He has a focus on inclusive finance, Takaful, and product development. He has played pivotal roles in successfully piloting and distributing micro and SME insurance products throughout Nigeria. He's a subject matter expert, and he has profound understanding of the field and committed to inclusive finance, which makes him a very trusted resource. His contributions have led to a transformative impact on the growth and development of Takaful and non-interest finance in Nigeria. So you're welcome, please, Mr. Babalala. Thanks for participating in this. Thank you. Let's give him a round of applause, please. Thank you. The next panelist is a good friend of Nigeria. He's from Kenya. He's a graduate of economics and business administration from Kenyatta University and a finalist in MBA at the University of Nairobi. He also holds a postgraduate diploma in marketing from the Chartered Institute of Marketing, the UK, management position, whilst as president of the Nigerian Actuarial Society. A qualified actuary, fellow of the Nigerian Actuarial Society, as well as the Institute and Faculty of Actuaries, UK, the immediate past president of my society, Nigerian Actuarial Society, and co-vice chair of the African Subcommittee of International Actuarial Association. She was the CEO of Prudential Beneficial General Insurance in Cameroon, and the Chief Risk Officer and Chief Actuary for Prudential Beneficial Group for spanning 3 countries. She currently consults across insurance and actuarial space, and her experience spans Africa and Europe. Please, let's welcome yesterday Kazem. So I'll hand over now to our able speaker. Look forward to her speech. And so yesterday, over to you. Thank you.
Thank you, sir. Okay. This is for forward, okay. Okay. Hello, everybody. Assalamu alaikum. So it's my pleasure here to give a talk around ethical considerations in insurance. And I know we're at the graveyard shift, but hopefully this will be interesting and engaging to everybody. I'm going to start. Hopefully this works. What am I doing? Okay, great. So first of all, I'm going to start off ethical considerations in insurance pricing. So there are 2 topics there that we need to think about: price and ethics. And the first, price, obviously everybody knows that that's just the premium, so hopefully that's simple. Ethics, on the other hand, I thought I'd put a definition up. And I mentioned that it's morals, principles. But the other thing I wanted to think about when considering this topic was fairness. Ethics and fairness tend to be used interchangeably. So I thought I'd sit down and put that up together and say, what are the differences? Because when you're thinking about prices, ethics are morals and principles. It's subjective. It's based on your culture. Fairness is justice. When you look at 2 people beside each other, are you treating them equally? Are you being consistent in how you're treating them? And I think it's important that we think about that in pricing and where we're going around that, because it's important. Anyway. Oh, something has happened to my slides. Sorry about that. Anyway, next I want to talk about pricing. And in this, I'm going to tell a little bit of a story, hopefully. It will make sense when I get to the end of it. If, as an actuary, I think about pricing, I want to get together and there are 10 people who come together in a club. They all have a car. The car's worth 1 million naira each. Historically, we've looked around things and we've seen that roughly 1 in 10 cars get stolen every year. So for this group of 10 people, the expectation is that 1 car will be stolen. And this club wants to make sure that they have enough money to be able to pay for the car that was stolen by whoever that person is. Okay? So at the beginning of the year, knowing that it's roughly going to be one car stolen, they divide the cost of the car 1 million between all 10 of them, and that gives them 100,000. So they pay 100,000, expecting that when one car is stolen, this fund they've accumulated together will be given to the person. So effectively what we've just done there is we've determined the premium. Okay? We've looked at the possibility of the event happening. We've looked at the cost when the event happens. But when we're in insurance, there are a lot more considerations to happen. There's things like expenses. So who went to collect the money? What car did he take there? Are we employing people to collect? So those are salaries and expenses. And as such, when we're thinking about how much the premium should be, it's no longer 100,000, it's now higher because we have to pay for expenses. Also, when we're pricing, if we've collected all the money in January, can we invest it? If we can invest it, then we can make some money. Then maybe we should be charging less than 100,000. Maybe we should be charging 90 because there's investment income that can be used to make up the considerations around that. So when we're thinking about pricing again, it's thinking about investment and thinking about whether or not that can be used to reduce the price for people. Then the other thing to think about is we've said it's 1 in 10 chance of the event happening. What if it was 2 in 10? What if when we looked back in history, 5 years ago it was 5, the other year it was 2? We need to allow for the fact that we don't really know how much it's going to cost. So we're going to add a little bit more and put that into reserves for the fact that the price we initially thought might not happen. So that's important, and that's quite key in thinking about pricing. Is what I want you to do is think about the elements around it, because the price is the outcome. When we're talking about fairness initially, and we're talking about the people and everybody included in this process, one of the things we needed to think about was the policyholder, so the person who's bought it, the operator, the regulator. They're all part of the consideration around pricing. The policyholder wants to pay as little as possible. That's their role in the whole thing. The operator wants to be solvent if we are looking at Takaful. If we're looking at conventional, they want to make a profit. So again, the higher the price, because that's their objective. The regulator wants to balance the economy. Maybe, maybe not. So maybe he sets a minimum price, maybe he doesn't. You understand what I mean? So everybody in the pricing journey has an objective. And if we're looking at ethics around it, how are we balancing around that part in making sure that we can price adequately? So step in something called the actuary and having to do something called expert judgment. So the actuary is going to sit and consider some of the issues around it and decide whether or not he can, on balance and thinking about all the people around it, can he find the right price? Okay? He's going to think, when I'm pricing and I'm looking at the data, am I looking at the data for Nigeria? Is that the right thing for me to look when I'm pricing for Lagos? Or should I be looking at the data for Africa because I have no Nigeria data? If I'm pricing in Lagos, is it different to Ibadan? Even in Lagos, if I'm pricing for somebody on the island and somebody in Ikeja, are they bringing different risks to the table? So all of this needs to be considered. Do you need to be prudent? You know, the words you will hear from an actuary is best estimate. So this is my best guess as to what's going to happen. But your best guess could be wrong, because at the end of the day, we all don't know the future. So the question then becomes, do I need to be prudent and allow for the fact that my guess might be wrong? And then how prudent do I need to be? Is there an ethical consideration around prudence that I need to think about? Do I need to think about whether or not I'm overcharging? Okay? And so those are some of the things that need to be considered in pricing. So here I've got a little bit of it's a rising graph, but I just wanted to talk about the different ways in which pricing can happen. So if we start at the bottom, we've got the expert pricing, and I know if we have any operators in the market, everybody's used to this. Somebody comes and says, no, the price is X. So he says, in my opinion, the price is X. So I look at a car and I say, that building is 2%, that building is 3%. He does no maths, no nothing. He just knows from his experience that it's 2%. So that's an expert judgment. That's very basic start of the whole chain. Then we go up, somebody comes in and has done some mathematics, looked back in history, looked at what has happened in the past, and then says, okay, this is my risk-based pricing because I've looked in the past and I've said this is what has happened in the past and it's my expectation of the future. So I'm using that to determine what my pricing is. Okay, good. Then the next person comes in and says, maybe I need to look at behaviors in pricing. So I've looked back and I've said it's 1 in 10. But as I said earlier, the guy in Ikoyi probably doesn't drive as much as the guy on the mainland. So should I price differently? Should I price, is the traffic different in Lagos compared to Abuja? Do they have more accidents there? So then behavior comes into pricing, because the more, you know, if I look at the Lagos example, you'll say that the island, the roads are better, maybe, who knows? Cars are driven less, maybe, who knows? Maybe they need to pay less premium because they bring less risk to the table. So that's one way to think about it in pricing, and you have to kind of consider whether or not those are appropriate things to be taken into account. Next, we look at dynamic pricing. So I've looked back over the month, and I'm an operator in the market, and I see that I'm not doing as much sales as I thought I would. So I want to make sure that it means demand is not as good as it was. So I give discounts. Whether we call it discounts, it's impacting the price. It's just another name for changing the price. But it allows us to be temporary. So do we do that as well and make sure that we have some price? Because what we want to do is make sure that we are selling. We know that volume is important in everything. Then we say, okay, maybe we need to get AI into the matter and have a little bit of AI, and people are buying things. We talked about technology. People are buying things on the app. So we noticed that in the morning, there's not that much traffic, so we give discounts in the morning. In the afternoon, people are there and they're more ready to buy, so maybe we give less discounts because at that point in time, there's demand. And that all impacts on price. And then the last thing we might do, which is the dynamic offering, is we use AI and then look at the type of customer we're going to. So I'll give an example and say your app is being used by 2 bankers. You'd expect that 2 bankers with the same car, with the same reg, they all got promoted on the same year, so the cars are the same. But one is an IT person, the other one is a relationship manager. Should we charge them differently? The relationship manager is more likely to be on the road during the day than the IT guy. So you see, it's the person bringing more risk to the table in that respect than the IT person. So should we charge them differently because we now know that their behaviors are different? And this also brings me to the part which I will suggest and say, in Nigeria on the motor side, we insure the car. In some other markets, they insure the individual. Anybody's got any opinions on which is right? Because if you insure me, you know my driving pattern. My driving pattern assumes I'm the one driving the car. But in Nigeria, you have your driver. You have your brother. But you're insuring the car. So how do you know who's driving and who's bringing what risk to the table? Any licensed driver, yes. That's the way we insure I'm insuring, you're paying for the premium. And if I want to analyze it, am I sure it's you driving or it was your wife driving at the time? How do I know what risk you are bringing to the table with that car? Sorry, I'm going to take this. And I'll be quick.
This is purely insurance question, and it's interesting that you brought this up. You know, the way we practice insurance in Nigeria varies significantly the way it's done overseas. In UK, for instance, the price is not only determined by the vehicle, the user. The district of usage is equally considered. Way of parking, how you garage your vehicle and all of that. But in Nigeria, our practice, just as you know, in terms of behavior, we are almost different. The same way in terms of the pricing of insurance. Otherwise, by the time you go by that, then you see that you probably will not have customers to even work with, because other companies will just rate it the way it comes. First and foremost, know that we even don't have uniform rates. So everybody just work on this discretion, look at the variables available and all of that. So in terms of risk assessment, we're really having some gaps. And so therefore it affects the pricing ultimately. So that's actually some of the responsible factors. Thank you.
Yes, but that then brings to the fore that, is it right what we're doing or is it wrong? Because I had a conversation the other day and somebody said, oh, in this UK, there is a problem. Why are they charging me? Is it that I can't drive somebody else's car? If I go and drive somebody else's car, they want me to pay another insurance. Is that right?
Very important question. Actually, this is why presentations before yours, we are just recommending cooperation and collaboration. Competition is what brings about this terrible gap. It's not only the driver to rate, but the vehicle, if it is an obsolete vehicle, that when it gets impact, damage, the parts are not available in Nigeria or Africa, you have to order it from outside. That has to be considered. Where do you park the vehicle? These are all questions on the questionnaire. How old are you, the age? Rating a doctor that goes into your hospital and will not close until 6 p.m. as rating an 18-year-old diamond dealer who is everywhere during the day. The risks are different. Unless now we come to cooperate and collaborate and do it right, the competition is killing our industry. Thank you.
Thank you, but are we allowed to rate on everything? So I'll take, for example, in the UK, about maybe 10 years ago, they had looked at the data on motor. I'm walking while talking, so bear with me. They had looked at the data on motor and they had realized that women were better drivers. Up women! Hey! So they had realized that women were better drivers. And in fact, some insurance companies had set themselves up to insure only women. Then the rules were changed and it was seen as discrimination, because it was seen that you are discriminating against men by charging them more. So again, the question then becomes, is that ethical? Are we allowed to use all differences in pricing, even though it's sometimes advantageous for one person over the other? Yeah. So I said I was going to be quick and I was going to be short. So that didn't happen. Anyway, this is my last slide, and I just thought I'll talk about some other things that are happening on pricing. So profit versus value. Are we actually, when we bundle things together, are we giving them value? Because sometimes we sell products that people don't even know they need to claim. So is that value to them? Fairness and access, we've talked about fairness, access. Are we actually making people aware of what's available to them and how they can claim and how they can get involved in it? Personalization, so we all say risk sharing. How much risk are you building to the table? Profiling is talking about the discrimination bit I talked about. Data, where are we sourcing the data from? Sometimes when you need to do pricing, you don't have any local data. Where are you getting the data from? What adjustments do you make? Are those adjustments being fair to everybody in the room and who you're dealing with? And then the last one is transparency. When we have financing options, are we being fair to everybody, especially to the lower end of the market? So if you have an annual premium and you want to pay monthly, should it be divided by 12? Is that being fair? I don't know. I'm leaving that question open for discussion. So thank you very much. I'm going to hand over.
Thank you so much for that yesterday. Insightful. Yeah, thank you. I have a question. In part, it came through your presentation. To what extent, for instance, should we allow, or should Takaful allow, for anti-selection? And let's remember we're talking about equity in pricing. Anti-selection really means, I know, for instance, I know I'm ill, but I'm taking out a Takaful health policy because the contributions there would assist in meeting the costs for treatment. So should we say, wait for a few months before you can benefit? Should we ask more questions? Will underwriting be easier if more questions are asked? If more questions are asked, would people be put off? So those are the things that come to my mind. Professor, you seem...
Yeah,
yes,
thank you very much.
Cheers.
The issue of fairness comes into play when you are dealing with an exchange contract whereby is what I'm giving equivalent or commensurate to what you are bringing in. That problem has been resolved by the fact that the contribution you are making to the pool is a donation, tabarruk. It's not something you expect to get the equivalence of what you have dropped in. So if I am sick and I go for Takaful, knowing fully well that I will soon claim, to other participants, they may not see that. The Takaful operator may not see that because my other contributor or participants are paying a donation, because in Takaful, it is mutual guarantee that I want to take care of my brother. I want to protect him. So what I'm giving him, I'm not expecting equivalence. What I'm doing is a donation. And once I give a donation, ownership has been relinquished. So he must see that as fair, to use the word. So that has been resolved because it's a donation. I'm not necessarily going to get whatever I get. Maybe I know for sure I'm still going to, if I don't make a claim, I will have a share in the surplus, and I have that spiritual feeling that I am contributing to the well-being of another person, that a Muslim is a brother to a Muslim. Once we agree to form a pool, we are there to protect ourselves, to guarantee ourselves, to stand by ourselves. We don't have that feeling that, so what I give him, I must get back. So that's that. Thank you.
Thank you. Yes. So you're really saying anti-selection should not be anticipated.
Sure.
Any other? Steve, you've had experience in this in other territories also. Yeah.
Yes. From what I see as a practitioner of Takaful and also insurance, anti-selection is all over, both for the Takaful and also in the conventional market. We have cases where risks are placed basically because a claim is anticipated. And I have many examples, but I can just quote one. When we used to provide travel insurance in Kenya, we had a few cases where some sickly participants will be brought on board, and some are even traveling on Hajj. And then while in transit, they go into hospital for surgery, for whatever other cases. And you see, this happens even in the conventional world. So this is something that keeps happening all the time. And I think just like conventional underwriters do, sometimes you need a waiting period for some of these cases before you can actually effect cover. So for Takaful operators, we are not immune from unselection that takes place all the time.
Yeah, thank you very much. We have just 5 more minutes. So I'll move to another, we're talking about pricing. And we're talking about what will happen in the future. So there could be a contingency loading. Should in case what you feel in the future will not happen, and you don't want a loss to arise in the whole arrangement. Does Takaful, in pricing for Takaful, should prudence be allowed for or not? Yes, sir.
Yeah, indeed, it should, because for Takaful, able to meet more claims. You are able to meet more claims. So, and that's the sole purpose of Takaful, risk management. If at the end of the day there's a surplus, then it is shared. But the major objective is risk management. So prudence is key. It's very key.
Thank you very much. Presenter?
So I'm just here to put out a possible alternative view and say, if you're too prudent, are you overcharging? I'm not going to give an answer. But I'm just saying, because prudence means charging more. How much more is prudent?
Balanced judgment.
It's the actuary doing the pricing. So what should you do?
Well, it will come out in surplus.
But if it comes out in surplus, you've already asked for it at the start. So is that prudent?
Well, I think prudence will come into play because there is something we call Maqasidu Sharia, which is, what is the objective of the Sharia? One of the objectives of the Sharia is preservation of the wealth, preservation of life. Every Takaful outfit must be able to assess globally what is the impact of our operations on the Takaful operators, on the community, in the society. So I think prudence will have to be measured when you take care of all these elements. Thank you.
Thank you. Okay, just a quick one, Steve.
I think it's a very tricky balancing act also, because when you look at pricing for insurance services, you have to look at other aspects. You're also looking at competition, because we know that insurance in most markets is actually price driven. So are you going to outprice yourself, or are you going to price yourself within the market and also guided by the actuarial guidelines that you do have? Then how do you deal with competition? How do you deal with the bottom line? You have to balance all those things. Given that Takaful is also a new model, you do not want to come into the market, overprice yourself, and close shop. And so that prudence comes in for you to be able to balance so that you can maintain a healthy bottom line and also be able to pay surplus if you risk fund is profitable. So that balancing is really, really very necessary.
Yeah, thank you so much. Just a very quick one before we leave. I want to touch on the agents. A lot of what people know about Takaful or will know about Takaful comes from the representatives of the company. The agents, the marketing literature, the customer care unit. How do you feel that these affect pricing and equity in pricing, if at all?
Well, I want to say that agents, they are very crucial. When we send them out there, the first question is, Do they have the wherewithal in terms of knowledge, experience, exposure, and correct judgment? Because a Takaful outfit that does not send out their competent agents risk reputation risk, because they could lead to mis-selling. And when there is mis-selling, the negative feedback to the organization can be colossal. So, and because Takaful has stuck out its neck that say, we are ethical. Like Nur Takaful says, win-win. So agents must be able to project a good name, a good image for the business. And that is why agents coming from the conventional setting needs to be reoriented.
Questions, that brings us to the end of our...
There's a question.
There's a question? Oh, yeah, please.
There are two questions.
Oh, excellent. Yeah, thank you.
Thank you for the opportunity. I just want to say Takaful have the answer to all that is on the table. That is to say, Chairman, first you said you buy a bottle of Coke, you know what you're buying. You buy a car to use, you know what you're buying. But when you buy insurance, it's intangible. You define it to say it is like you are buying a potential future loss. That's what you're paying for. But Takaful is saying we are not selling. We are promoting coming together for mutual benefit, cooperation, and solidarity. So that we are creating a pool that is out to benefit all. Risk selection. Yes, Standard Life. I love my sister. She's like a provoker. She's provoked all minds here and left you with no answers. But we are saying risk selection. Yes, Takaful is not claiming to say we'll ignore risk selection. No. You wait until when you are sick, you come to buy insurance to travel, and then it ends up being a claim. No. The risk you present to the pool, you are paying in accordance to the risk you are presenting to the pool. You have a risk of 1 million, we're charging you based on that 1 million. You have a risk of 2 million to present to the pool, we are charging you based on that risk. So therefore, when you come as a person also, when you're sick, and we have enough questions to determine or to assume that you are unhealthy, you'll be paying a subscription more than what the Standard Life would be paying. But remember, there is nothing like prudence to the benefit of the Takaful, because the surplus we make tomorrow is not for us. It goes back for distribution. It goes back to pay zakat. So therefore, Takaful have all these answers. That is why insurance, the challenge we have is to create the awareness. Let's go out and talk to the people so that they understand. So that all this that you were saying, we had 100 vehicles, only 10 got involved in an accident. We paid these losses. All the rest we are sitting on to say it was a good underwriting year. Takaful says, no, that's unfair. Islam says, go back to the people who contributed, who have not suffered losses, and give them their share of the profit that has been generated. That's what Nur have just, demonstrated. And therefore, there is no more fear. There is no more like being prudent to overcharge. There is no overcharging, sister. When you pay us 10,000, when we are doing profit sharing, you get more than the one who paid us 5,000. Sustainability, of course, yes, is our concern. We do not want to say we follow the unhealthy competition and charge you prices that will not help us to sustain. But here, if you are well educated about or well informed about Takaful, you are more delighted paying us more, since when you pay us more, you get more of the profit that is to be distributed tomorrow. So it's no more a question. So definitely, our biggest challenge is to go out there, train our brokers, train our agents. I remember when I was in Nigeria, the first time the Brokers Association invited me to their AGM annual meeting, it was like I got very stern, frown faces, taking Takaful, why does he want to introduce Takaful to the country? It's like something to do with religion. But at the end of the day, when we inform the people well, they come to realize that Takaful is nothing but fairness, the fairest way to doing insurance, and not more to do with religion, but more to do with ethics and more to do with fairness. And at the end of the day, I had all faces smiling. So we just have a challenge to go out and teach. Thank you.
Assalamu alaikum. Before asking the question, let me use this opportunity to express my deep appreciation with the way this conference has been organized by Takaful. Okay, by the way, my name is Umaru Kairanga. I'm the chairman of the Nigerian Stock Exchange and happens to be a director with Jais Bank. But we are not here for competition because I've seen my MD of Jais Takaful here too. We are complementing each other. So the question I want to ask is, with intense competition in the Takaful and the insurance sector in general, and the pressure on the management and staff, especially from people like us that sit on the board and other shareholders, in terms of returns, in terms of target, KPIs, and the rest. What measures can we take, if not to eliminate, but to reduce to the BRS, the unethical practices that employees will decide to follow for them to meet those targets? Thank you.
Thank you. This is to the actuaries in the panel. Should the actuary worry about the incoming potential customer rather than protect the pool?
So for your question, sir, I think the answer is to strengthen the Sharia Supervisory Board and the internal compliance unit to ensure that, a framework is put in place to de-risk this kind of matters that you've raised. So it's an internal issue that can be resolved with frameworks in place by the organization. Inshallah. So should the risk be protected?
I heard the question. I was and I was telling him, because you can all hear, I'm not sure of the answer, because if we're talking about risk pooling, the question is, who are your customers? Are your customers the customers you have now, or are your customers everybody you have throughout your entire lifespan? Because if you start segmenting, the question then becomes, how do you handle that? If I take, for instance, and I'll give an example to portray why I'm not sure of what the answer is. If we look at expenses, I buy a building, for example, into the fund. Do I share the cost of that with everybody who is in the fund now? We all know that that means there's not going to be any fund to deal with. There's not going to be any risk pool. Or do I share it over a lifetime of period, which is I'm looking at those who I have now and those who I might have in the future. There's some things that we can spread. There's some things we can't. So maybe in a way that's the answer. My president, I'm going to get you to help.
No, yes, I fully concur. Steve wants to say something about that. Yeah.
Just a quick comment to what the director has raised here. I think as an industry, and Dr. Wan made a very powerful presentation on collaboration, the onus is on us as Takaful players here, just to ensure that we collaborate and we don't shoot each other in the foot, because our market is huge. The problem that we have in most of the new Takaful markets is that we focus on what you have and you focus on what I have. What about the market out there, which is unconquered, where you can develop new products, you can open up those areas, you can come up with micro Takaful products that will open up some of those areas. So I think a combination of professionalism and being ethical and just ensuring that you don't concentrate on the same risk, all the Takaful players. You look for a market out there, and the market is actually very huge. So I think the collaboration, exchanging notes, sharing ideas, and then finding your own market, which is out there. The market is not in Lagos. It's out there, and there's such massive potential. So I think the Takaful players need just to know where they should play their game well. Thank you.
Thank you very much. I think with that we can end. So thank you very much, panelists. It's been a pleasure. Thank you for having us too. Thank you.
A big thank you to each and every one of you. If you could come to the center for a photograph. I think everybody has agreed that Ms. Kazim left us with more questions than answers. Even in her final submission, she wasn't certain if it was an answer or, just... You can go home and think a little more on the issues she raised. It was a pleasure to have each and every one of you.
Ever heard of the tale of the merchant and his camel? He left the camel by the acacia tree and went in search of rocks for his tent without securing its noose properly to the tree. Upon his return, the camel was on the loose, nowhere to be found. He wailed and shrilled, yelling aloud about how God failed his camel. A sage traveling along the desert saw him and asked why he failed to secure his camel and blamed the loss on God. One might wonder where the story leads. Talk about firmly securing our priceless assets for a better future. Now here's a more secure story. In April 2016, in the vibrant heart of Nigeria, a groundbreaking vision was born. Nur Takaful Insurance Limited became the first full-fledged composite Takaful insurance operator licensed by NICOM. 100% indigenous owned, we embarked on a mission to transform the landscape of ethical financial services in Africa in line with our vision to be the beacon of ethical financial services in Africa. At Nur Takaful, we understand that financial protection is a fundamental need for everyone. Guided by our commitment for innovation and exceptional services, we continuously leverage the latest advancements to redefine the insurance experience. Our core values are at the heart of everything we do. Equity and fairness, teamwork, honesty, innovation, compliance and competence, accountability, leadership and professionalism. An entity where ethical financial protection meets unwavering dedication. We believe in creating win-win situations for our valued customers because at Nur Takaful, Takaful Insurance is for everyone. Join us on this remarkable journey as we shape a brighter and more secure future together. Again, remember the tale of the merchant and his camel. Have you secured your camel? Ladies and gentlemen, welcome to the first African Takaful conference hosted by Nur Takaful.
The question we started the conference with is essentially the question we're ending it with. I have in my hand, well, I tried to find a rope, by the way. I couldn't find one. So I have in my hand a scarf. And I don't know if the cameraman can zoom right in the center, right there. What you will see is a knot. Now, if you pull on one end, and I pull on the other end, I can assure you that it will not come loose. By this, I've essentially practiced how to secure my camel, if I had a literal camel. I'm not certain. I think that the material used to make my makeshift rope would probably snap on the the weight of the pull between us. Now, of course, for many of us, we're not talking about a literal camel, are we? You possibly have a cow at home, right? One or two people here, especially if you live really up north, you may have at least one camel somewhere. A horse, for sure. A few goats, maybe. Now, if you've got a car, if you've got a home, if you've got a family, that is what you need to secure. And I'm hoping that at the end of these 2 days, you've learned what it means to secure your camel. That is essentially the aim for Nur Takaful. These conversations that push Takaful and Islamic finance forward across the continent sets an example. At this point, we are expecting what is finally, a vote of thanks from the Vice Chairman of Nur Takaful Insurance Limited. Please put your hands together for Aminu Tukur.
Assalamu alaikum. Good afternoon, everybody. I don't know where to begin. It's Alhamdulillah, it's been an amazing 48 hours. At this point, I feel very, 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 very emotional because of the support we have gotten from everybody. Everybody we asked to join this event, to be part of this event, accepted. Nobody said no to us. So it is alhamdulillah. Thank you very, very much. In this hall itself, we had over 400 people who attended. Online, we had about 400 people who joined virtually. And this has just been amazing. So I thank everybody who took time off, who found this event worthy, who found the speakers, the host, the promoters, the partners of this event. Thank you very, very much. You have made this first event a fantastic event. To the other players in the Takaful industry, Salam Takaful, Hilal Takaful, Jais Takaful, you guys have been amazing. Thank you. You made this event yours. Thank you very much. All the CEOs of all the Takaful operators were here from beginning to the end. Thank you, thank you, thank you. To our speakers, those that traveled far, near, from different continents, from the UK, from Africa, from the Middle East, from the Far East, thank you. I don't want to start mentioning names. You guys are amazing. Michael, Farhan, Tarek, Professor Ziad, thank you. If I've missed your name, it's not intentional. Thank you. It was just one phone call, and you guys all made it. You made our jobs so much easy. Thank you, thank you, thank you. We had a unique opportunity here. Since before COVID, our ACE, Advisory Committee of Experts, have not met, had a physical meeting. But this opportunity allowed all of us to meet. We have one in Dubai, our chairman is based in Malaysia, and one in Kano. They have not met since maybe 2018. They were able to meet Dr. Abdul Salam, Professor Abdul Salam, Dr. Warshu, Professor Hashim. Thank you, thank you, thank you. To our directors, I can't say more than what the managing director said earlier on. You guys push us, but in pushing us, you give us everything we ask for and more. more importantly, you give us your time and attention. That is just priceless. Thank you very much, the chairman of our board, Mr. Mukhtar Bakari. Thank you. All those talks I get late at night, thank you. I appreciate them and I love them. Please keep them coming, sir. To the team, to the guys in black that go around and move things around, we really appreciate you. Thank you. We may have had issues, but we do appreciate your work. You guys have been fantastic. You guys have made this a memorable event. Thank you very, very much. So many other vendors, the cameramen, the people who built the stage. Everybody that has come in here has said the stage, the setting, the decor has been fantastic. Thank you. Thank you. I would want to say a big thank you to Nabila, the MC, even though she did not acknowledge King's College being the best school in Nigeria, but she has been amazing. She has been patient. A lot has gone on between her and our team and the organizers. A lot has gone. Lastly, to the best team in the world. You guys are amazing. New Takaful staff, you guys are amazing. Thank you. Thank you. Thank you. I don't know what to say to you guys. You guys have come up and given more than enough. Thank you very much. We couldn't have asked for more. We couldn't. You guys are amazing. Thank you. Thank you. Demola, Habiba, everybody. Abiola, Zainab, all the Zainabs. Thank you. You guys are amazing. I know you're tired, but I know you're tired is not tired. Please keep it coming, please. Thank you very, very much to everybody. Alhamdulillah, we really appreciate everybody. Thank you to everybody who has attended. Inshallah, we will see you again next year. Thank you very much. Thank you.
Food is served, please. You can just make your way to either side of the hall. You will find a buffet, same as yesterday, an assisted buffet. Thank you so much to every one of you once again.
A very good morning to you all, and I'd like to welcome you to this event on behalf of Takaful Insurance, your women insurance. I'd like to